Good morning. Good morning. Stocks are up. Retail sales were lower. I guess they interpret that as a plus for a Fed rate hike. A smaller chance for a Fed rate hike with retail sales lower. I don't know. We'll see. The markets are up, fading a little bit from the high just now, but looking pretty good. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Markets look pretty good this morning. We're looking for a melt up. We did add some SpaceX yesterday. Rocket Lab. Rocket Lab is up. Okay, Rocket Lab is up. Inside of yesterday's wick, Rocket Lab. Okay, let me post this in the room. Top 10. ARM Holdings. Okay, we got 7 minutes to go. Again, retail sales came out at -0.6%. They were looking, forecast was for an increase of 0.1%. So we missed by 0.7% on retail sales. I don't know if that's interpreted as a good thing as far as decreasing the odds of a Fed rate hike. Negative news, when news is really positive, I mean, retail sales down, I guess you could consider that part of the inflation. I don't know. Retail sales down because things cost more or because people have less money, or a negative is a positive. I don't know. We'll see. Let's get ready for the opening bell. We got about 6 minutes to go. Okay, Rocket Lab going into the open, off and off a little bit, back to the 200-day. SNDK. Near the 50-day, looking good. Let's see, SOXL. Make sure I don't have any sell orders. Yeah, Captain. I believe they launched. Boo. All right, let's see. SpaceX. Okay, I lost my. Let me just update these. SPX. Okay, I want. Who do I want here? Just laying. I updated some of my charts, so I lost a few things here. Let me see here. Okay, where do I have? SoFi's over there. Okay. Cerebras. Nike is up. Nike's in a toilet. Okay, my Nike Workday. I don't know if you guys were paying attention. I know Grover and a few other people were, but Workday yesterday popped. Workday popped right at 2:30. Workday and Trade Desk, both of these popped. So for those of you who bought either one of these recently, I have Trade Desk. I don't have Workday. Nice pop. Let's see if that follows through. Workday inside day for now. Or excuse me, Trade Desk inside day. We've got 50 seconds to go. 50 seconds. Okay, let's get ready. We're about to open here. Okay, the Qs. Qs are moving higher. Let me check. Good morning. Okay, S&P is starting to bounce a bit. We'll look at hedge flows, see how we're setting up. Okay, Datadog on the move. All right, the security stocks were active lately. Datadog. Okay, that looks good. Zscaler. Datadog was up, what, 25, 24 points on Monday? Datadog on earnings. Do we follow through? Zscaler, Palo Alto, PANW, and CrowdStrike. Those were very active. All right, they look like they might follow through. Okay, MasterCard and Visa. Okay, bouncing off the 20-day. MasterCard, Visa. Okay. Intel trying to push into yesterday's wick, upper wick. Okay, SNDQ, SNDU, SNDQ, short, SNDK, catching a bid. Okay, NVIDIA's on the move. NVIDIA going. Apple. Meta,
SNDQ, STKH, AEYE, MTXH, CAPR, RGTX, BOGX halted, QXO, ARCX, RKLX, SGML, ETON, ADHG.
All right, let me take some of this off here. I got some Apple and some NVDA I want to take off. Let's see, NVIDIA, that's today's calls. Let me take these off right now.
MTXH, STKH, DARE, ARCX, CAPR,
Okay, NVIDIA, I'm out. NVIDIA had today's calls.
IQST, BUCI, ADHG, ADHR, BYND, AXTX, SNDQ, POEL, SXTC, AAOX, AAOG, BERI.
Okay, I'm all out of NVIDIA's calls that expired today. Okay, that was a nice little gain. Cutting it close. It's about $75 per contract.
NMAX, AAOG, RSKD, AIRJ, BUCI, STKH, BERI, AAOX.
I'll take it though. Shake Shack, let's see. NVIDIA looks good. SNDQ is the short on SNDK. Nike reversing, moving lower. Okay, Apple, let's see, Apple. Okay, what do I have in Apple? Apple, I think I have longer dated calls, right? No, I have today's calls. Okay, so Apple. Let's see, Apple. Apple's still going. Apple looking good. Any news on Apple? New AI manufacturing hub opens, Apple. Okay, that might be a good pop there. Okay, took some profits in Apple. Have today's calls.
THM, BW, STKH, JCAP, EKAN,
Tesla. Okay, Tesla, I got 40 deltas on Tesla. Those are out in December. I like to see more upside though. Tesla looking good here. Got out Apple right in time. Cool. Apple.
MTXH may rise in 10 seconds. BOGX may resume in less than a minute. MTXH.
All right, semi is getting sold right now. The Q's down. Okay, that's weird. All right, taking profits off. They're selling chips right now. Thank you, Corey. Tesla, nice pop. Okay, chips are under pressure. Under pressure. Okay, we got 1-to-1 up volume for now. Q's 1-to-1 down volume. Dow Industrials are up. Let me see what that looks like. The Dow Industrials. Let's see what's moving on Dow. Google, Disney, Cat. Okay, could be some rotation out of semis. That's what it looks like. Looks like rotation out of semis into these names. Okay, looks like rotation. Okay, looks like rotation into value stocks out of growth. Okay, it wasn't fast enough. Okay, a little bounce here, a little bounce. Okay, SK Hynix bouncing. It's showing strength. SK Hynix could go again today. Okay, Apple is up. Did sell into strength. Apple. Okay, it's got a little work to do. It's got to get back above the 50-day. But these other stocks like Coca-Cola, Coke looks good. MNST and Celsius. Let's see, Monster Beverages, MNST, PepsiCo, Pepsi, clearing a 50-day. 50-day, not 5-day. Okay, so it looks like rotation. There's no hurry to chase after these stocks. Let's see, Monster, MNST, Celsius, SCEL. Celsius, okay. Nike in the toilet again. Looked good pre-market, and then they just dropped it. S&P 500. Let's see what this looks like. Okay, just grinding higher. Looks like they're buying the dip right now. Okay, that's Delta. Let me look at okay, Gamma. Gamma Lama Ding Dong. All right, let me zoom out again. Okay, we got support right below 77.90 SPX.
Less than 10 seconds.
Okay, let's see if we get a bounce. Sustainable here. App Lovin, day 2. Thank you, Grover. App Lovin. APP, not Advanced Auto Parts. All right, nice little bounce there. Okay, up down volume still looking pretty good. So it looks like they're buying the dip for now. Okay, buy the dip. Looks like the dip is going to hold. What do I want to? A little early. I don't want to jump into anything just yet. It's Friday. Okay, chips are getting bought now. Chips. Dip buyers. Intel. NVDA I took, right? I took off NVIDIA. Didn't I take off NVIDIA? I'm losing my mind here. Filled orders. Yes. Okay. NVIDIA and Apple out of both of those. Apple looks like it might want to keep going here. Apple. Okay. Trade Desk had a big pop yesterday. Inside day. Work day, same thing. Inside day. That pop yesterday on work day took a lot of people by surprise. Look at that move. You see that? Look at that move yesterday. Right at 2:30, volume came in, boom, blasted that higher. I don't know what the news was. Let's see, yesterday. Silver Lake is reportedly in talks to buy Workday, possibly with partners. Okay, that's why it popped yesterday. Silver Lake in talks to buy it. Okay, could get a bid here. Okay, S&P, nice bounce so far. Tesla looking good, Frano, I agree. Tesla looks good. All right, Tesla's into the gap. Tesla into the gap. Okay, it's above the pre-market high. Looking for volume. This can be a hard one to trade for opening range because the volume is going to be pretty significant. All right, Tesla. I already have Tesla, but let me add some Tesla here. Tesla. Where do we go? Do we want to go cheap today, or do we want to go next Friday? I'll vote to go for next Friday. We could get a big bang for a buck with today's calls. There's a lot of volume already on the 50 deltas for a week from now. Okay, let me see if this pulls back in a little bit. All right, I'm going to set up a trade for a bounce by vertical. 350, 360. Okay, we'll keep an eye on this. Keep an eye on Tesla. Okay, so a lot of support right here at 77.90. You got a lot of negative gamma overhead, so prices could shoot higher quickly if we don't roll over. Watching Tesla. Okay, everything got sold into that strength there, which is generally what I do on a Friday. Generally, I will sell into strength on a Friday, especially on a pop in the morning. If I have, like I have Amazon calls that expire today that are out of the money. I don't think I'm going to make a profit on those. We'll see. S&P is looking like it wants to go a little bit more. Tesla looking for a follow through. All right, Tesla, I'm in the 350s for next week.
LBGJ, COHH,
MDXH, WET,
AAOX, AAOG, ALRY, AXTX, COHX,
LBGJ, SPKH,
LITX,
FG, GXA,
Okay, so here goes Tesla looking good this morning. I'll keep my finger on the trigger here on Tesla. Don't want to go green to red. Tesla. NVIDIA looks good. Sold that. Okay, Tesla.
FG, GXA, AXTX,
AXTU,
MDXH, AXTU,
FGI,
Tesla on the move.
LBGJ,
Damn it. How do you keep this from jumping around like this? Thinkorswim. I've got like 4 different positions in Thinkorswim. I'm trying to select these August 18th. Let me just do this. All right, I'll keep that open. All right, I'll keep that open. All right, that'll work. That'll work. Okay. Tesla on the move. Tesla. Let me post this on Thinkorswim or on social media. People might be interested in joining us after we're already in it. Tesla.
FG, ONNO,
COHX,
AXTU, JDZG, AXTX, LBGJ,
FGI, AAOX, LITX, COHH,
USDE,
AXTX, AAOG, AXTI,
All right, into the gap on Tesla. Thank you.
FG,
WET may resume in less than a minute.
MDXH, LBGJ,
BEX, LITX, COHX,
FG,
COHH,
MDXH,
FGI, HHS, WET may res in 10 seconds.
Tesla into the gap, looking good.
Resume in less than a minute.
Good call, Frano.
AXTI,
Tesla, good call, Frano.
ONNO,
LITX, COHX, MF may resume in less than a minute. AEX,
MDXH,
FGI,
Okay, we're above the pre-market high on volume.
IBX and may res in 10 seconds.
STKH. GXA.
All right, I'd bet that S&B Capital is in Tesla at the moment. They tend to buy the pre-market. If the okay, so here's the strategy. All right, so S&B Capital, if you don't know, they're one of the biggest prop firms, most profitable prop firms. They got about 50 people working for them. When it moves above the pre-market high, that purple line closes above on volume, that's a buy signal. Okay, now they're going to ride this into opening range most likely. So knowing what they're doing right now, you got some big money after this. We just got to watch. We got to watch. Time and sales. Okay. Okay, so I'll turn active trader off, the chart off. Just that.
CAPR. MTXH.
MTXH. LITX.
Okay, time and sales.
OPEX.
Okay. All right, they got some big sellers overhead, so be aware of it. Got some big sellers overhead. Tesla.
MTXH. JTCG.
LITX.
Okay, those two 20,000 shares. I just went through 20,000 shares. We got 56,000 shares overhead at 306.11. Oh, wait a minute. This is the wrong freaking chart, Vinny. Come on. Give it the program. Tesla. Tesla. There we go. That's better. Almost screwed that puppy up. All right. So we still got sellers overhead. 20,000, 16,000. Ooh, there's a million shares right there. Million shares on the offer. Did it get filled? I'm watching time and sales and level 2. A lot of sell orders overhead. I don't know if this is going to make it much higher. Could be shorts covering. Could be shorts covering. So we'll see if this continues.
WPT only resume in less than a minute.
Tesla.
COHH. 84. COHX. LTX. GTCG melted down. AOG.
Tesla looking good. Okay, a lot of overhead sales. We're still pushing higher. That's probably shorts covering. Looks like shorts covering, folks. Looks like shorts covering. Okay, looks like shorts covering on Tesla. We got offers hitting the tape. 20,000, 20,000, 116,000, 12,000, 24,000, 16,000, 16,000. It's a lot of volume. A lot of volume. Looks like shorts covering. 359,000, 24,000. These are all on the offer. Okay, I need to see some size on the bid. Need to see size on the bid. Tesla. Tesla. Tesla, still a lot of size on the offer. Could be shorts, could just be shorts covering, hard to tell. There's lots of size on the offer, but yet the prices continue to move higher, so that's a good sign. We've got implied volatility turning up on Tesla as well. Looking good so far, Tesla. All right, Tesla. We have pre-market highs right now, Tesla. We don't want to back off. University of Michigan sentiment, actual 51, previous 54. Michigan sentiment coming in light. Okay, Michigan sentiment coming in light, 0.3. 51 versus 55.
TGIF may rise in 10 seconds. NVDA.
All right, looks like Tesla is right up against the opening range high. What else is working here? Anything else working besides Tesla? Microsoft trying to push. Netflix, I had a pretty decent day yesterday, looking for Netflix to follow through.
Sage may rise in less than a minute.
Opening range, we're right at the opening range high. We're above the pre-market high.
To the upside. Sage may rise in 10 seconds.
Futures trying to turn up. Tesla at the opening range high into the gap, looking for more follow through. There's a few sellers, 20,000, 24,000, 20,000, 12,000, 16,000, 16,000, 200, 20,000. They keep selling at the offer up here. Okay, do we follow through? It'll be shorts covering if we continue. Okay, they're fighting right now. The offer is getting most of the play, which means they're selling larger positions up here. Could be that the shorts are just covering. Closing positions at the high. I'd like to see it pop through here. Man, a move towards the 50-day on a Friday wouldn't be unusual. Okay, we're hanging right now at opening range high. It's going to be hard to beat that volume from this morning to give us a signal. Okay, SK Hynix, it's just below the opening range high. SK Hynix chips did catch some selling this morning. Oracle inside day. Oracle, Palantir pulling back inside day in the upper half of yesterday's range. ARM Holdings looks pretty strong coming off the low here. Inside day on ARM Holdings. Coinbase, nothing there. Intel looking the strongest, really. Intel strong. Dip buyers, Intel. Okay, Tesla looks like shorts covering. If we can pop through this area, that's gonna tell us all of this offer that we're seeing right now. All of these sales going off at the ask. That's gonna be shorts covering. Looks like we're gonna go. Looks like Tesla might be a banger today. We're into the gap. There's not a whole lot of people that traded it in this area, except if you go back a ways. Okay, you have to go way back over here to see any trading that occurred inside this gap. Way back over here. So back in September of last year, you have to go back to September of last year to see any trading that occurred inside this gap. And also in April of this year, we got to pull back. People bought here, maybe looking for some to cover or maybe take profits. But we're into this gap now. So this is looking good for Tesla. Okay, Tesla breaking higher. There goes Tesla. More gap, Tesla, thank you. $47,000 shares just traded and higher.
LYTX, SNXX, SNDU, AEHL, SNDG,
BGL, NGL,
HTFL, AEHL vaulted to the upside.
DFSC,
Go Tesla, go Tesla.
SKY,
MFA resident 2 seconds.
Okay, I also have October 350, 360s. I don't remember buying these. I do not remember buying these. These are up quite a bit though. These are up $150 per contract.
DFSC,
DFSC.
All right, I'm going to say take these off. Nice profit, $150 per contract. I got 10 of those. This is a pretty good day so far. Mic check, mic check. Okay, I'm good there. All right. A little bit higher. We're trying to push through the opening range, not happening.
DFSC.
Also, I want to point out that University of Michigan survey does skew more towards
Oh, and
inflation,
info.
whereas conference board skews more towards jobs. So when people are feeling upset about inflation, you're likely to see it hit the University of Michigan number.
Okay, we're pushing higher now.
Market,
HTFL.
FSC.
the supply demand in technology, just not enough supply to satisfy all of the
DFSC.
that people see.
Come on, Tesla. Come on, Tesla. You can do it. Okay, I don't want to get so focused on Tesla. I lose sight of the other stocks. New York Fangs, watching those. New York Fangs. We had a nice little push yesterday. We need to see a bid come in and push this higher. Finish the week on the upside would be nice. Last week we had a bullish breakout in the S&P 500. We're looking for a second week higher. Okay, so that would look good on the weekly time frame. Okay, let's look at the weekly. All right, so 2 weeks up wouldn't be that surprising on a breakout of a 12-week consolidation. 2 weeks up, finish higher. That's what we're expecting. We're expecting 2 weeks higher, close near the highs. All right, Tesla's starting to see a little profit taking at the opening range high, Tesla. See if we can follow through. All right, 3 red candles closing would be caution signal. On the 2-minute, 3-minute, 3 red candles on a 2-minute chart after a move like that. Okay, we're about to take out this. Okay, we're about to take out this low.
So we can't rely on diversifying, especially in
All right, starting to see profit taking now. Tesla seeing profit taking.
DFSC. LFS. AOG.
and you get the big diversification benefit.
AEHL may resume in less than a minute.
All right, Tesla just took some of those Octobers off. All right, we're seeing profit taking. Tesla, NVDA. That was a good trade. NVIDIA got out of that. Those expired today. Shake Shack. What is Shake Shack doing? Shake Shack did bounce. Shake Shack. Okay, we're trying to break out. Shake Shack is trying to break out new highs for the month of August.
AEHL may rise in 10 seconds.
Shack trying to break out. If you have any Shack, you might want to pay attention. Shake Shack. All right, it's kind of a choppy trade there, right? Let's go to the 5-minute. All right, with the opening range high right now, Shake Shack.
MF may rise in 10 seconds. FCL.
Okay, we've got Cerebras has elevated. Arval.
LITX.
Okay, everything else is kind of slow at the moment. SoFi pushing up. Okay, this is Shake Shack. Let's look at SK Hynix chips. SK Hynix having a hard time staying above the pre-market high. AMD. Okay, let's put AMD here. Yeah, let me put AMD here. AMD. Let's see what the volume looks like. Okay, I've got some nice relative volume here. Relative volume. Okay, it's not that great. Not that great. Looks good though. We're headed to the 50-day. Headed to the 50-day. Some decent morning volume on AMD. We're above the opening range high, so that's good. We need to see some opening range breakout signals on that one. Let's see, SK Hynix. Okay, watching SK Hynix as well. Stocks, trade desk. Okay, SKHY, we'll keep an eye on that. Relative volume looks good so far. Okay, NQ, just sitting here. The Q's just sitting here. At VWAP, Doji, up high, Doji. Okay, so that looks like a decent breakout, right? Decent breakout of this channel, yeah, it looks like a channel down on the Qs. Okay, some of you are holding those November calls. I am as well. Let's see. Is it Sean? Was that you, Sean? How we're doing? How we doing, Sean? Or did you sell yesterday? It was a pretty decent day yesterday. Okay. Okay, watch Tesla. Okay, whenever you see an opening range, I mean a pre-market pop like that, okay, you got to watch for these little pullbacks. Okay, let's go back to the 2-minute. Okay, you got more than 3 red candles, so this needs to bounce at VWAP. Watch VWAP here. Okay, we're right at VWAP right now. This is VWAP right here. That needs to pop. We need a second trade. We need this to do that. Looking at level 2. Oh, we got some sellers here. Let's see, 47, 42, 50, 45, 48. I'm looking at the pennies. 48, 48, 347, 77. Okay, we're starting to see buyers coming in. 92, 92, 97, 48, 48.05. All right, we got a bounce coming. Okay, 48.20, 48.16, 48.18, 48. All right, let's go for 49. Let's go for 49. 48, 48, 48, 348, 48, 348.25, 348. All right, so the bids are starting to chase the offer Bids are chasing the offer. Okay, it's got a bounce here so far. $48.20, $48.30, $48.16, $48.20, $48.47. Okay, a little bit of profit taking. 94, 447.94. Nike. Okay, the Q's. I'm going to switch to the Q's for a minute. Q's dropping off here. That's not a good thing. Okay, let's see what Trace looks like. Okay, we're probably going to come down to 77.90. If we, yeah, we're dipping a bit right now. 47.30, 47.20. We're starting to lose. 47.30. Tesla 47.20, 47.20. Okay. 47.20, 47.20. Let's get a bounce here. Tesla. All right, so we can see we're pulling back here. Qs are pulling back. SMH pulling back. All right, so be watchful. Watch your chips. SK Hynix. Okay, Tesla 46.86. All right, we're losing VWAP. Losing VWAP. $46.50. Okay, back to pre-market range. Pre-market high. S&P is pulling back. We're losing VWAP. Tesla. Okay, Tesla 46.29. 46.20. Okay, we're about to lose 46. 46.45. All right, so buyers coming in. A little short covering. Wow, they're really playing with this one. 46.40, 46.45. Just watching level 2. 46.60. All right, they're starting to buy. 46.55. Come on, Tesla. Love to see Tesla run today into the gap. There's not a whole lot there. Only thing I can think is that you got stops overhead right here. Okay, whenever you've got a gap, pretty well-defined area of resistance. We hit it yesterday, got rejected. A move above this level, there's going to be stops up here. There are shorts up here looking for this to roll over. Their stops are going to be overhead. So a lot of times they'll get a stop run. We'll take them out. We'll dip and then rip again. So see if we can go here. We're at 46.50, 46.50. All right. S&P is still dropping, so that's not helping. S&P is dropping. We're probably going to bounce right here. Okay, so if you're thinking about a long, 77.90, 77.90 is a 99%.
Shell may rise in 10 seconds.
WBT.
LFS.
LFS.
It's pretty funny. Okay, we're looking for a Tesla to bounce here. 46. We're looking at 46.20, 46.30. We're looking for a bounce here. Looking for the level 2 to pick up a little bit of buying right near VWAP. Okay, we need to see that VWAP bounce. Tesla. Okay, we're looking for that bounce. Okay. We're going to lose 46 here, 46, 46.15. Okay, Intel, all the chips are down. Looks like profit take. Could be a rotation. Rotation. 77.90. Let's see where net OI is. Net OI. 77.90, pretty obvious net OI. Non-zero day, there's nothing there. So 0 day is pretty obvious, 77.90 right there. Okay, let me turn 0 day off again. You can see 77.90, pretty big level right there, 0 day. Hmm. 50% fibs. Thank you, Corey. All right, we're at PMZ, Tesla at PMZ. All right, we're starting to bounce, Tesla. Tesla showing a bounce. 46.60, 46.62, 46.60. Looking for a bounce here. Okay, Datadog turning back up. All right, Datadog, those security stocks. Zscaler had outperformed all of them this week. Zscaler, CrowdStrike, CrowdStrike, bouncing. Okay, let's see what's actually moving the markets right now. Okay, we're on a second week up on the S&P. That's a good sign. Let's look at XII. SII. I want to see what the institutions are doing. Institutions, inside days. So it looks like they're just holding for now. Let's look at the equal weight index. Equal weight index. Where are you? There you are. Equal weight at highs. Equal weight daily is showing new highs. Equal weight daily making new highs. Okay, that's a good sign. Number of stocks trading above the 20-day, just kind of sitting still. 50 days climbing a little bit. So there's a lot of stocks still above the 20-day. The 50-day is starting to catch up. That's a good sign. Let's look at the New York Stock Exchange and check out breadth. Okay, breadth. It's okay. Compared to yesterday, though, we got 71 down. Okay, we got advanced decline making new highs. NYAD.
ONFO. AAOZ.
All right, looks like some rotation in the value. Let's go see here what this is telling us. Yeah, you see growth. Growth is losing it. See it? It's very obvious here. All right, this should be obvious. Yeah.
ONFO. AAOZ.
All right, so that makes it obvious.
ONFO.
WR.
MDXH.
Okay, Tesla, can we manage a bounce here, Tesla? Tesla's trying. It is trying. Okay, so pretty obvious we're coming from growth into large cap value. Okay, energy. Energy's bid. Materials.
WR.
Okay, so that looks good. Materials. Let's look at Freeport. Freeport McMoran. Rio Tinto. Vale. Newmont Mining. What's gold doing? Newmont Mining looks good. GDX. What's GDX doing? Bouncing at the 200-day. Gold. GLD. Consolidating the recent gains. All right, S&P is still looking pretty weak. S&P is still looking weak. To start. I mean, it's a pretty decent week. Weekly looks good. Okay, we're diving. Okay, we should see support right in here.
BGI.
Okay, we should see some support coming in.
LNKS.
LNKS.
Looking for a bounce on the S&P. CrowdStrike bouncing. Okay, Tesla. What are you doing, Tesla? Tesla.
LNKS. MDXH.
Intel. SK Hynix. Oracle. Off for now. Okay, so let's look at some value here. Value stocks. Okay, we said earlier Disney looked pretty good. Disney breaking out. Disney's breaking out. Chevron, CVX. CVX. Caterpillar. CAT. McDonald's. All right, trying to stay above the 50-day. McDonald's. Okay, JP Morgan. JP Morgan. What's Bank of America doing? Bank of America, Citigroup, BACC. Let's see, Boeing, United Health, Microsoft. Microsoft actually flagging. Mhm. All right. Boy. Starting to level out here. S&P starting to level out. Watch hedge flows. Okay. Hedge flows starting to turn up. Okay, 77.90. SK Hynix sitting in the top of the wick of yesterday's price action. The wick is very small. We had just a little bit of profit taking at the close yesterday if you were paying attention to SK Hynix. Okay, SKHY. Yesterday we had this little bit of a wick. Okay, the 170 strike, I took some off a few minutes ago. I had the 170 strike call, as you may recall. 170. Okay, SK Hynix was taken earlier on a limit order while I was watching Tesla, Intel bouncing, SPX support bounce, 77.90 GEX. Support bounce here. All right, I'm going to buy a few calls. Let's see if we bounce back. Do I want to buy Mondays or want to buy today's? Let's see. S&P, what do they cost? S&P, I'm looking at S&P for the bounce. S&P for the bounce. Finish off the week higher. Okay, so today's 40 deltas are $620. That's 7,800. And do a vertical. All right, let's see how far they bounce this. All right, I bought a few of these 7,800s. All right, with a dollar stop, looking for a bounce. 7,800s. Okay, let's see how far we go with this. S&P 7790 support. All right, 7790. Okay, where am I? There we go.
MBT, NVIL, NVIG, HTFL,
Okay, could just be a bear flag, so be careful.
NVIG, HHL may resume less than HTFL.
SR1 7790.
VIX,
FAT.
HHL may rise in 10 seconds.
Could be a bear flag here. S&P.
VIX, NVIL,
All right, could be a bear flag.
LNKS. FTXH. LNKS.
HHL holds it down.
Okay, a few stocks are bouncing. That's helping the S&P as well, back vice versa.
LNKS. WET. LNKS. WET.
TH,
Come on, you can do it. You can do it. All right, looks like a bear flag. I might just go ahead and take these off for now. I'm going to take them off for now. Small loss. I'll probably get a nice little bounce. I'll try them again if we break above 77.96 or so. It's Friday. I don't want to give up any gains from this week. All right, looks like we might go here. All right, I got this trade on again if we start to break higher. Let's see. Monitor. What do they call this? Filled orders. S&P. What do they call it? Create opposite order. Okay, I got this ready to go. I'll pay up a little bit for these, but that's okay. If we start to go, I'll go again on these. Looks like we're going to go. New York Fangs are mixed at the moment.
AEHL may resume in less than a minute.
Okay, so they're sort of indifferent with this level right now. Not getting much of a follow through. What's Tesla doing? Tesla dropped a little bit more.
BANL vaulted to the upside. AEHL may rise in 10.
It looks like we're going to go here. S&P looks like it wants to go. Okay, I'm ready to launch these if we start to move higher. Okay. Looks good. Starting to move. Okay, let's go, go, go. Looks like a big bear flag, right? Could go either way here. Hedge flows. Just kind of sitting down here. Come on, let's go. LATSGL, let's push this higher.
LNKS.
All right, NVIDIA turning back up. Wouldn't mind doing something with NVIDIA. S&P still sitting here.
ADHL.
Nope.
MF.
CEBA. BANL may resume in less than a minute. BWAB.
Hi, what do you came to visit? Came to visit me? Hmm? Did you come to visit? Kitty cat? You came to visit?
LNKS.
Sure taking his time deciding what it wants to do, right? It's below VWAP, so that's negative. S&P.
BANL may rest in 10 seconds.
NVIDIA turning back up. Microsoft near the highs, opening range high. Apple, if we could get some short covering on Apple, that would help the S&P. Those two together, plus NVIDIA is about 15% of the weight. So we get all three of these to turn up. Microsoft just showed a buy signal. Microsoft showing a buy signal. What? Can I help you? What do you need? What do you need? What? What do you need? Oh, you want to trade the S&P with me? Okay. Microsoft looks good here. Microsoft. S&P. Let's go. 78.10 would be back at the opening range high. What? You think I was killing you or something? What's wrong with you? What? You want some of these? Mama told me not to give you too many of these because it's not good for you. These treats are not good for you. You got to eat the other cat food too. All right, here we go. S&P. $78.10 is the opening range high. Looks like we might get going here. They're still fighting here.
DFSC.
Tesla still fading. Intel trying to hold VWAP. S&P back to a dip here.
BANL may resume in less than a minute.
New York Fangs are mixed. Microsoft looks pretty decent. Hanging out up here, building a base up high. So there's no hurry to get back into Microsoft. I wait for this base to build, then we could reassess. New York Fang components are just sitting here. Datadog's on the move. Datadog. Okay, back above the 50-day. Looks like it wants to go some more. Datadog had a big day last, was it Monday? Datadog. Not a lot of volume on Datadog. October. Nah. Not much opening range either. Datadog. What about Zscaler? Zscaler's been looking better. Zscaler. November. Nah, nothing there. CrowdStrike maybe? CrowdStrike. CRWD, CrowdStrike. You want more? Yeah.
BANL wanted down.
STH. Open and close.
May resume in less than a minute.
MTXH.
All right, so it doesn't look like we're going to follow through. SpaceX pulling back. S&P no follow through. Back down to the low.
MTXH.
BCARU wanted.
Chop
less than 10 seconds.
TGIF.
Hedge flow's turning down again. Looks like we're going to move lower. Looks like we're going to move lower. Take out some stops maybe. $77.90. Taking out stops. Looks like they're taking out stops right here. Futures, the weighted signal has been red all morning. All right, starting to push a bit now. Shorts covering. You still hungry? Hmm? There you go. Can't believe you're still eating these. No follow through. No follow through at the moment. Feels like it's going to drop off.
UMAC. NVDA resumed less than
Tesla's still pulling back. Intel. Datadog. Let's see. Okay, no follow through here.
UMAC.
SNDK, buyers step up at the low of the day. All right, S&P is pulling back a bit more. Back down to the low.
Less than 10 seconds.
Okay, 1-to-1 up down volume. Mixed at the moment, 1-to-1. What Cerebrus doing? What is Cerebrus doing? CBRS, Cerebrus. Just sitting there. Inside day, Cerebrus. Shake Shack making new highs. Trying to break towards the 200-day overhead. Shake Shack. Tesla still moving lower. Let's see.
SKTD. TSLQ.
S&P. SNDK. Copart is active. CPRT. Copart. All right, big move on Copart today. Okay, Copart. Let's see what you look like. CPRT.
NVC. OPEX. SKTD.
Okay. NBIS. That's been active lately. NBIS. Copart. Opening range breakout. Hard to chase it up there. Nebius. Get enough? Hmm?
NVC.
He's so cute, cat. Oh boy. All right, so S&P continues to fade a bit. AMD. Okay, we popped up and dipping at the moment. AMD. Let's see what the volume looks like. All right, so Nebius looking good. Okay, all the New York FANGs except for NVIDIA. Well, Snowflake's trying to turn. Tesla, big fake out on Tesla. Microsoft's holding up fairly well. NVIDIA. Okay, STX, Seagate, consolidating. Nothing's really trending, okay? We popped up and we're just kind of sitting here. Nothing is trending. I'm looking for trending stocks. Western Digital. All right, SOX, SOXL. No, nothing there. Airbnb was active yesterday. That's still pushing the highs. Do I have any Airbnb left? Airbnb left? No, I don't. No, I took it off. All right, Airbnb, I'm out of that. Okay.
BANL may rise in 10 seconds.
S&P still fading. Didn't bounce. It's right in this big area here.
MNTS. LFT.
99, 99. These are all 99 percentile, so we could go all the way down to 77, 75. That's a gamma flip point. We don't want to go down that far. I'm going to take a couple minute break.
EYPT. EWAB.
That's what I think I'm so excited about. It's pretty popular. I put in the
UMAC.
part of the industry that did well, but nobody else is trying to. And
Fear greed index is over in the greed.
doesn't exist in
TSLQ.
So I transitioned to about this for a reason because it's really like this is the part of the journey.
Okay. Micron, Apple, AMD, Amazon, Intel,
That's costly. That's timing. It's, a lot of-
ONDS,
Um,
ONDS. That looks pretty good. ONDS. Ondas Holdings, ONDS. About the 60-minute 20 EMA. ONDS.
MNTS.
Most stocks are not giving much.
EWEB.
Pretty slow here. Booking.com. Looks like that might go. Booking.com. At the highs. Booking.com. I'm going to take a look at that. BKNG. BKNG.
CGTL. UMAC. CLYM.
Not a volume. Don't have too many stocks with volume, folks.
CGT now. And then, it was on our way to the office today. And we couldn't even tell. I couldn't tell. So, from my and right in front of us all along was the person who I wanted to adopt that person. Specifically,
Copart, Take Two. We just looked at AppLovin.
But that was a surreal day. What's your career politician about your South Carolina? Supported a massive tax hike that automatically increased every
SDRB. CBRZ.
All right, we just continue to fade. There's no bid in the market. Most stocks are not trending.
TSLQ. UMAC. SERB. LFS.
We get about 26,876. 6 best friends, all in about 15 great loves. Our most human limits should be celebrated with him.
What are the Qs doing? Qs. Okay, consolidating. All right, I'm going to take a 2-minute break. I'll be right back.
TGTL.
CGT.
PT. T. TSLQ. T.
S&P is still in a descending pattern. VWAP overhead. Moving averages need to flip over and start trending.
CLYM. TSDD.
All right, let's look at Tesla. All right, a couple of you got stuck on Tesla. Oh, wow, look at Tesla. Okay. Had a nice run up in the morning, Tesla.
TSLQ.
And then it just rolled over.
TSTD. TSLQ. TSTD. TSDD. TSLQ.
Tesla,
TSLC.
terrible reversal on Tesla. SpaceX starting to turn.
FEC. PL. TSLQ. SPX. TSTD.
NVDA.
All right, S&P still dropping here. Futures still dropping.
SPX. SADD. YND. DXH halted to the upside. SATD. SPX.
Okay, we continue to lose much of yesterday's gains. We'll see if we bounce 50% retracement. Okay, we should be below the 60-minute 20 EMA probably, right? We're right back to the 60-minute 20 EMA. EQs.
TSTD.
New York Fangs. Okay, the Q is back to the 60-minute 20 MA. Still trending, but watching closely. New York Fang pulling back. Still a double top for now. 2 weeks up. Two weeks up. Watching. Two weeks up, we're looking for a close up here. Not nice. The Qs, weekly. Okay. Still got a ways to go. The spiders made a new high. Spiders made a new high. Okay, we made a new high. Bollinger Bands are coming together, so it looks like we're going to consolidate again. Watching the S&P, it's trying to bounce here. Shorts covering. There's hardly anything with relative volume that's worth trading.
TSH may rest in 10 seconds. TSH.
SNDK, buyers at the low. SNDK buyers stepped up. Looks like another bear flag on the S&P. I wouldn't bite.
TTIC.
Momentum. S&P trying to turn back up.
Welcome to Attorney Talk. I'm Ken Pocario, host, and thanks for joining us. And today we're talking to Jan Salaji, who is Reflexivity CEO and co-founder, and Jay Hatfield, who's the CEO and CIO of Infrastructure Capital Advisors. Gentlemen, thank you for joining us and welcome. There's so much to talk about, but we're going to start right away with what's happening to the price of oil now at this, at least the 60-day ceasefire. We see oil come down 27% the last 2 weeks, trading now about $70. So talk to me in terms of, where you see the next opportunity, where you see the geopolitical situation, where you see what's happening in the markets.
Well, for us, I think that the purest expression of this oil premium coming out of the market have been airlines. That's been the main, because they go straight to the bottom line. So that's been, I would say, what we've emphasized the longest. I think what you're going to see second will probably be, currently the way markets are trading the Fed is primarily what's happening with energy prices, right? You can see that the leadership is very reluctant to really hike, but they have been put in a very uncomfortable position. We've gone from in March 2 cuts being priced in to now a hike being priced in.
That's right. And actually, I think one of the banks, I think it's Bank of America, has got 2 hikes priced in. Yes, but the market is pricing in 1.
Yes. So I think that's going to be another thing will be very interesting.
The AT&T trying to climb again. AT&T
There being potentially hikes coming.
back to the 50-day.
Notably abstaining from submitting his own view on that and being very careful.
Which is interesting.
But I think also if you think back in history, a Fed chair when they're first appointed almost always gets challenged over something. Right. So you try to
AT&T, Verizon, T-Mobile.
Well, he's going to get challenged.
All right, this is back above the 200-day. AT&T, Verizon.
Someone in the White House, he's not going to be very happy with that. But that's a whole other conversation.
We've been bearish about oil for the last $15 for a specific reason. We expect OPEC to go to maximum production, which is about 32 million barrels. We'll have a 4 million barrel surplus, and that'll quickly run down the surplus. So we're actually think we could go below 60.
Really?
And for that reason, we think that the chances of the Fed increasing rates is absolutely 0.
Right.
We're going to have 2 huge negative headline prints in CPI over the next 2 months because it takes 2 months for it to go in.
Right.
And we're also bullish about core. Airline fares is in core.
NVDA
There's other bleed through to core. And then tariffs are rolling off, and shelter eventually, even if the Fed doesn't correct the way they calculate shelter, which is fraudulent. They don't update it except every 6 months.
Right.
So it's like we were talking about the markets here 6 months ago. Nobody wants to hear. Right. So even if they don't fix that, it's going to roll down. So we have 3 cuts in our forecast. We're optimistic about rates, and we have a 9,000 target on the S&P, which does require lower rates.
Wait, 9,000 this year?
This year, end of this year.
Really? That's very impressive. But yes, that would require a couple of rate cuts. I just don't see rate cuts at the moment. Unless you see this sudden CPI, PPI, and the PC start to really collapse.
AT&T.
Our forecast. We're not saying that we're
All right, looking good. 60-minute 20 MAs trending.
doves versus Hawks. So we're not, that's never been our call,
Right.
Because we were surprised Trump nominated him. He's obviously a hawk, has been a
Yeah,
hawk this whole year.
he's made it very clear.
Right. He's very politically powerful though, so Trump capitulated to that.
Right.
But that we believe the data, we're forecasting the data will justify it. It's not this year, but over the next year.
Okay, so within the next 12 months, not in the next.
So it's at least 1 cut this year.
But I just want to say one thing, because you brought about airline trips, which I thought was interesting because the price of oil had skyrocketed, is that I was on vacation. I had gone to Europe. I can tell you something. First of all, the plane was completely sold out. I was in France. Americans everywhere. People are traveling. Everywhere you went, it was crowded. There was tourists. Plenty of Americans everywhere. I went. And so it's kind of interesting because I thought there would have been maybe a little bit of a pullback, but I didn't see any pullback in terms of traveling, people spending the summer going abroad.
I mean, I think that's the other premium that currently, or the risk premium, if you call it, which is that under geopolitical uncertainty, people are more reluctant to travel. If that comes off,
Right. Right, that comes off, but that just came off, right? You know, these people that bought these tickets had to buy it 3-4 months out.
So I'm saying it's gonna get more crowded.
Right, it's gonna get more crowded.
Yeah.
And if the price will come down, and ticket price actually come down, that'll only fuel that whole conversation. All right, so let's talk about Warsh's reforming the 2% rule versus these rate cut headwinds, right? You Fed Chair Kevin Warsh just held rates steady at last week's meeting, 3.5 to 75, which I think is, by the way, kind of well within the normal range, right? But he's stripping out the forward guidance, which I actually think is kind of interesting, right? I think it's a complete rethink of how the Fed is communicating to the markets. And I remember back, you know, when I first came into this business in 1980, Greenspan was the Fed chair. And Greenspan didn't say anything. He came out, here's what we decided, he went back in. He didn't hold your hand. He didn't give you a Xanax. He didn't say to me, ask me any question you want, come lie down on the couch. None of that. And if that's what we're going back to, I'd actually think that that's a great idea. I think it's less chaotic for the markets.
Absolutely. The only issue we have with it is the dot plot is a fantastic contra indicator.
Yeah.
So if they think there's increases, there's almost certainly going to be decreases.
Right.
But it is ridiculous because you have 19 now, 18 different views. The Fed should come up with one view,
Right.
with a better economic model. Don't use Keynesian models. Look at the money supply, look at oil prices, forecast inflation, and then it's okay. Like it would be reasonable to cut now after. So, because PC is absolutely important too. It's easy to forecast. It's already below 2 if you correct.
Well, again, it's going to be interesting because the model was expected to be hotter than last month. Then there was something that was going to be even hotter than the expectation tomorrow on both top line and food. And so that's the people that sit back and say, so CPI, next SPC should really reflect this one. It's too soon. So I'm curious how you
Should be relatively irrelevant. You can calculate PC from CPI and PPI. So there might be some rounding difference where it's 0.4, but it's really 0.35. It should be a muted reaction because it's irrelevant given the 30%.
So, you know, it might be a muted reaction as you did, but you know, the problem is you have all these algorithms, all these smart logic algorithms that you would scrape the headline for plots over every word. And that's the problem.
Or why be made less than 10
Yeah,
seconds?
just the probability of getting one. Yeah.
Well, I want to go back to what you were making before, which is that
S&P is trying to bounce. S&P is trying to bounce.
There's also, yeah, it's correct that you seem like we have a deal. We've also been dealing with the situation in administration that could be negative. We can wake up tomorrow. So
AT&T looks good.
it's like always somewhere in between. Right now it's open. At the moment it's open. Right, so then you have the wave exactly. Now, the other thing to think about also is that I think there is general uncertainty in terms of the medium term of the impact of AI. It's not just does it affect jobs and productivity, but also there's a huge capex cycle that's driving by that is actually going in. So being the issue that I think the Fed has faced before with forward guidance is a big help locked into it. It's like if I don't do what I guided, right, I was wrong 5%. And so removing that, I think, is giving them that degree of flexibility that they had in the 9 months that should return to.
And that's exactly what Greenspan did. Greenspan did. He just got to give it again. I'm not going to figure it out.
And they didn't have this completely arbitrary 2% target. He would preference over the weekend in stock market. But that was a real Fed chair. He did a fantastic job. We need to go back to that. The Fed used to judge the looking markets. This Fed would never, look at the stock market crash 30%. They wouldn't do anything. They'd say, oh, well, inflation to the top. They have no ability to forecast the Greenspan was consultant. So yeah.
JJ Federer that can.
Well,
At stage, maybe something less than this.
So
Indeed.
So when you're stuck with that expectations theory, then you have no flexibility.
Q's. All right, Q's looking weak. Q's are still fading. Apple trying to turn up. Apple's turning up. Microsoft. Okay, Tesla. Maybe we turn here. Tesla.
Sit down, let's talk about it, ask all these questions. I understand during the crisis, maybe that was okay, but then we just got to go.
Palantir. Palantir turning. Palantir.
People say you're passionate about dentistry. That here, Dr. Science got great bedside manner. You guys got Dr. Sale about 33rd. Is it pick on third? Third out. And got no yeah, you got options.
What is Spectrum Internet? It's the most reliable internet. It's connecting with my followers out there and in here. It's secure internet for you and your family. Keep your phone calls stay online. It's Wi-Fi that stays on. Oh, it doesn't.
Stay connected.
So what? Spectrum Internet? Get everything you want. Switch today at spectrum.com.
4 days of incredible RV savings. The RV show is Myrtle Beach Mall. It's 13th through the 16th. It's priced to sell until we tear down Sunday. Brent is on feature and its top 12 months. Exclusive show offers you never seen this year. Top dollar for your trade and financing sessions that fit your budget. When the show is over, the deals are over. Join us August 13th through the 16th at the Great American RV Show next to Bass Pro Shops in North Myrtle Beach. Just makes it was getting up early in the day. Getting this piece of music at the camp. So let's talk about S&P 500. That's your part. I think it's great. I'd love to get it. But we've got this AI clip, right? Talk about it should be entirely profitable.
Netflix. All right, let's see what Netflix looks like. Netflix probably good probability with Netflix, right? Netflix.
Looking at the market, you're sold off yesterday. Yes. I'm surprised the market corrected. But talk to me about how you get the S&P 500 when we have this mismatch.
Well, this is not a
a target like the internet targets in the end of the night. So it's not just AOL 3,000 or 5,000 or 10,000 kids that. It's just simply we start the year 23 times 27 minutes. That's the year end target for this year, which is a little bit impressive. 23 requires growth, right? A lot of people use the teams. That's before. So the corporate time we dropped it 35%, 35 to 21, huge. That raises the system. So 23 is on the high point. Oh, it's a 42. It's really good. And that's why we've been trading since that. And then the move from 8 to 9 is simply marking the market. 27 consensus that's included. So it's simply just using the same methodology, not some bullish move. You just have to reflect that. And by the way, it comes down, lower. But it's been moving like almost every day. Yeah, you can see a chart of it. You have a Bloomberg terminal. And so actually, I'd say the risk is more. It's like those earnings are going to continue to so it's bad. 20% right. Well, think about what we've done for. First of all, June's a terrible month. Not even getting a lot of rotation. And we have a war. So I would argue, if you had told me at the beginning of the year, okay, we're going to have a major war, what's going to go and June, where is yesterday? 6,500, 7,000, something like that. So if you're a market whisperer, I'd say.
All right, let's see. AT&T. Good one here, AT&T. All right.
I think it's a fate conflict. It's like in both houses. If the Senate's going to be 50 and 51, most likely. But that's not going to change policy. What we really don't want is a sweep of the Democratic Socialists. Yeah. And an increase in corporate. Like corporate tax rates drive economic growth and stock prices. That's not an immediate investment. That's a 28 issue. So I don't know why the market would sell off now, just because the simple. But I guess the problem is Senate, if it remains split, then the market likes kind of good. But if they take both houses, the president can still be on. They would set up for some reason. I think so long as, and I think this is what Joe was saying before as well, so long as you don't have the Fed aggressively beginning a hiking cycle, I don't think the market just collapses. It doesn't seem to. We've run, as correctly stated, we've run a ton of analysis on this. It's that ultimately gets people to
Netflix.
It tells you which market can go, and it tells you how far you can go. But ultimately, direction, it's definitely if we haven't reached a point where they start growing, and this is, I think, the critical moment, decision energy goes into it, you that is actually which is if told me at the beginning of the year you have the following period where the S&P will group is the better. Yeah, no, I'm pleased with the right. And I would just emphasize what I said. Do you want to call the market nearly flippable? Yeah. Follow the money spot? Yeah. That means you guys will recommend. Right. Then as long as you get the Fed cycle right, you get it. So we got bullish from Fed after the pandemic started. Get bearish when they overheated the economy, money spikes around 70. Means there's inflation still higher than the Fed. And then we got bullish after this.
Okay, Netflix. Just examining, taking some notes on Netflix. Let's see. November.
Is large only because the Fed's paying interest on reserves. It used to be 8 billion reserves, it's now 3.2 billion.
So the balance sheet is fine, given because assets in the way. If they haven't done anything crazy, they did during the pandemic. They shrink it. So if George wants to shrink it, there's only two ways to do it. Radically increase interest rates, which is not, or stop paying interest rates, which we're not in favor of. That's but we could do an extremely I think also be less probable because if the Fed cuts rates, so I don't know. So they were then shrink. Most people understand you can't to reduce rates, you have to increase the size of it. You have to increase the size of the balance sheet. That's right. I don't know if people understand it. It's just a pure
SADD.
economics when I was in college. For 7 years. For some reason, even people who should understand it don't. And so if they're not independent variables, the Fed wants to shrink the balance sheet, they're going to take some policy, which is an extremely I would just add one point to this, which is that when you're not ready to do something, you send it out. Right. Right. So,
So I thought part of the conversation was in order for him to cut rates, yes, we can actually see that.
you just can't do that. That's not the way it works. To lower rates, you have to increase the size of the interest rates. That's, and by the way, during the pandemic, you know, they actually had to keep rates below $0. They had to go in and do reverse repo. So a lot of people, even people should know this, the Fed has not going to keep rates very low. And so they're going to lower it, injecting up the increase in size. So you can't do, they're not independent variables. Everybody treats them as independent. They're saying, well, they're going, but it's offset by the balance sheet. It's not true. The balance sheet is not forward. And sometimes they do short term salaries. So the net sheet. So what do you think the 10-year, what do you think? 375 or below what? 100 over the term of the So to get there, we would have to be pricing in 3 cuts. Right, not to actually do them, but everybody would have to completely reverse in the Fed funds market. But I would point out, Fed funds is not a very liquid market, like we trade it, but they're not readily traded. The 10-year is a liquid market. It's barely budged during the war. Right, it's staying right there. It's trading at 50 over, normally trades 100 over Fed funds. So I would look to that as an indicator of whether we have rate cuts or not. If you don't believe our forecast. 10-year saying we don't need rate cuts. It's down today. The yield is down today. But to get it much below 4, we'd have to take out those 2 increases that are priced in and get 3 cuts priced in, and then it should drift below 4.
I mean, it has been interesting that since you had the Fed meeting, that you've seen airlines going higher, which was driven also by the oil price,
right.
And then 2 home builders that did well.
Home builders,
Yes, right. And so that is going to be.
It's interesting that home builders are doing well when mortgage rates are now back at 6.6%, I think. 30 mortgage rate.
But I think to the point that we were just discussing, I think the expectation is that if the 10 years here or lower, right, and the economy stays in pretty good shape, which it will, unless you start hiking rates, then that's what we do with that.
Yes. Yeah, I agree 100%. It's all in 6%. Like, actual earnings are pretty bad. We're long on builders, which is a great trade today. Yeah, and has been good, but it's all anticipated lower rates. Yeah, so I've looked at that, those type of indicators versus this liquid Fed funds.
Yeah, that's the real estate was up 1.5%. You know, I mean, there were 7 sectors that ended yesterday in the green versus 4 that, you know, I mean, it was all the tech names would take it to the woodshed, but the rest of the market was actually did very well, considering, you know,
Yes.
everyone was screaming and yelling, lighting the hair on fire. I mean, well, it's slow.
And that's also just
Netflix.
100%.
There's no way we're getting 9,000 just on tech. It's not.
No, you can't, no. You absolutely cannot. But that being said, would you still at these levels, would you still be adding to tech or would you be adding to some of the other sectors?
Definitely to the other sectors. I
Right.
think that this is what attractive about it, right? If you think that this was up until this point, uncertainty about the direction of rates, and then uncertainty about the direction of oil, and we're resolving both, or will be resolving both, if the opportunity is outside of tech, because there's nothing about this that has brought any new information about where the AI is going or where tech is going.
So where's that facility? Like what sectors would you look at?
Well, just again, broadly, things that are related to immediate developments are, and I'm just repeating myself, home builders, airlines, and so on, because you're now compressing the premium, you're also bringing rates down and so on. So that's where you want to be now.
CD
I
and
think in the sort of 3 to 6 month horizon, you're going to start wanting to look at some of the small caps and mid caps and so on. Because again, if the economy is doing well and rates are generally headed lower, that's typically the sectors that do well.
But the small caps are already doing well. And I think everything is doing well.
Generally, right? Like
Yeah.
you're starting to see, it's not, as we were just saying, despite the fact that we've had all a geopolitical conflict, the fact that we've had energy prices extremely, extremely high, things have held in incredibly well. And
CD
if
and L.
now the market can convince itself that actually the hikes are probably an overreaction, and that at a minimum, we're going to be
LFS.
staying where we are and possibly going lower, and you will see that next leg up.
Right, so there has to be a change, there has to be a broader change of heart because, like I said, the market at the moment is pricing a hike before the end of the year. So there's gonna have to be, and maybe that comes when we see next month's CPI, TGI, and PC, if we start to see, the price of oils that really impact that, and maybe that narrative will change. In any event, gentlemen, we've run out of time, but I want to revisit this in 4 or 5 months to see where we are. I'd love to get you by the end of the year to see if we're in fact at S&P 9,000, which would be tremendous. If we were. Gentlemen, thank you very much for joining us. Until the next time, take care.
What's good for career politician Ralph Norman isn't good for South Carolina. So with a massive gas tax hike that would automatically increase every year, his businesses took $300 grand in COVID loans they never paid back. And today, he's one of the richest in Congress. And Norman even went against President Trump on tax cuts and border security. Ralph Norman isn't good for South Carolina retiring.
4 days only, the Great American RV Show, presented by Campers Inn RV, August 13th through the 16th at Myrtle Beach Mall next to Bass Pro Shops. Show pricing on Grand Design, Brinkley, and more. And when it's over, it's over. 4 days, then we're gone.
Okay, AMD starting to turn. Let's look at AMD. AMD. Okay, let's look at the 60-minute. Okay, what's S&P is bouncing. Spiders.
And results like
Show de evolution. Las emociones que no son bien hechas. 24 películas. Cine cines de ley disponibles en las ciudades.
Okay, S&P is turning here. Okay, S&P 500 is turning. $50-day.
Demanding legitimacy.
Where's the 200-day? 200-day is down here. 200-day. S&P 21 days up there. 21 day.
What is that, party people? Welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Rumper, also known as the Wolf of Wall Street. We got 15 minutes. Driving crypto markets.
Intel turning back up. All right, futures on the move here. S&P. All right, S&P.
It's not all unicorns, puppies, apple pie, and roses. It's continued to come, especially in the world of self-custody. Here's a story I wish I was not reporting. Treasurer warns 14,000 customers after fulfillment partner suffers data breach. The incident marks the first time Treasurer customers shipping addresses were exposed. First, what happened? We're going to talk about. So this is a breach at Treasurer shipping partner.
All right, we're starting to turn.
Exposed information belonging to approximately 13,680 customers. 11,742 of them with compromised information included names, addresses, phone numbers, and email. Another 1,947 had just their names, cities, and email. The president made it clear that there was no violation of privacy, not saved, customer funds are not due, not compromised. That distinction matters technically, but criminals now potentially have a hit list of people who have bought hardware wallets and know where they. So let's talk. So the first risk, obviously, immediately is phishing. We saw this with the Ledger X breach many years ago. Tens of thousands of customers, their data was given. Every single one of them started getting emails and phishing attempts and attempts to steal all their money. Okay, great. The bigger problem right now is rich tax. Physical attempts to steal people's Bitcoin. You think I'm being hyperbolic? You should take a look at what's been happening in France over the past several years. So, in case you missed the story, basically, rich tax started increasing in France from 2024 to 2026. We've now been agreed for 70 attacks just this year, 4 or 5x since 2024 when they started. It came out that basically because of reporting rules to the French equivalent of the IRS, everybody transparently gave the government all the information on crypto that they held, and somebody said that's pretty much €100. And those people became targets. The founder of Ledger lost a finger. Literally, they got his finger off. €10 million ransom attack people's lives. Children have been kidnapped. And this is happening multiple times a month in France. And now Treasurer has sent people saying you could be next. Right? Criminals now definitely will know exactly where you live and if you bought it where to buy stuff. Some people will say it's still be good. They don't know how much you hold. But they know that you're holding up and you care about buying hardware, you care enough about self-custody.
All right, QQQ.
What your phone number is and this is an absolute and I'm from the hyperbole. So when you put this, in conjunction with the total card now, that I told you about last week, it's an ongoing export. It really is damning for the self-custody industry. Right? We were told, and telling people, not with J's, not with J's, be your own bank. And I didn't know that being your own bank also meant in 2026 being your own bank security, which means having the weaponry and know-how to protect yourself physically from violence when somebody tries to rob your bank. You're also told keep your keys to yourself. Don't trust exchanges with too much counterparty risk. But we talked about the counterparty risk of a data leak from the person who bought the hardware wallet. of counterparty risk, both part having it going to roll enough magic Dungeons and Dragons size to generate the skip rates. We're at the point where now the debate is if all these federal people should have sent it to a PM box to anonymous address, not use their name, blah, 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 blah. Nobody wants to do this. Do, in theory, believe in self-custody. Now we have to believe in multi-signature self-custody, which is something that geographically setting yourself on a scavenger hunt around the world just to be able to access that for your bank. Let's be honest, for 95% of people at this point, nobody is going to go hard down actually protect it. I don't know what the answer is from
Okay, NBIS is doing fine. Let's see. Tesla bouncing.
Bitcoin to rage against in the first place. We have a very, very, very big problem right now. Powerball works perfectly.
Q's, S&P 500, S&P. Okay, looks like a bear flag.
We can put aside to that finally one of the largest pieces of fun to them against the crypto industry for over a decade. Crypto firm Tether says KPMG completes long promised audit. There are people on the internet whose entire identities have been questioning whether Tether was actually backed by the assets that they said they had. Now the big firms has audited them and confirmed the backing of all of their assets. This was a big audit. Someone called it the largest audit in the history of financial markets for a first audit because they checked the transactions, they checked the actual holdings, they literally went to the vault and checked every single individual bar of gold that Tether owned to make sure that they were real and that they had. So this is only a problem. So, assuming my Tether launched years ago, but they were not back slowly by maybe they were backed by riskier instruments, but with time, as they became more legitimate in the industry did, that became a problem that should not have been fixed. It's being put to bed now, and hopefully we'll never, ever, ever have to hear about it again. You may remember that literally, I don't know if the Commerce Secretary said, protect the Fitzgerald for the assets that back it. It's fine. But now we have the audit that people have to begging for real. I think this is really, really big news. At least it clears one more negative narratives that we've had around crypto, even in recent times. I know Jason talked about this from the audit podcast has been very skeptical and critical of Tether saying they're not fully back because he went something on the internet. So, right? Well, now all of the fundsters and all the doubters and now change their opinion with their information. Listen, they have reasons to doubt it. Okay, fine. Like I'm a firm believer in strong opinions OCL. But if we still see this nonsense after it's now been proven, you know that somebody is just emotionally attached to their position. Yes. The next story right here. Strategy back when good face MSCI index removal under new proposal. That we're having engaged up all over again. This is something that we discussed just months ago. But MSCI is changing the qualifications of the test of what can be included in the index. A new methodology that would exclude non-operating companies from its global investable indexes. So this is not explicitly aimed at crypto targets. Companies whose value comes from primarily from accumulating assets rather than operating a conventional business. It comes to the three companies. Right, it's strategy, metal planet, and uranium over yellow tape. Right, that's definitely yellow tape and George Bush days of news before this. But yeah, so there's other companies, Ethereum treasury companies that could come up as well as sharply named in the future on the watch list. They're going to have to basically pass some certain tests and criteria, which they probably won't.
Okay, markets are just chopping people up. It's 12 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It is Friday, August the 14th. Looking for a bounce. No bounce yet.
Expenses and cash flow. I guess the deeper threat here would be trust. If these rules are adopted and strategy and meta planet are removed from this index, other indexes may follow and adopt the same rules. So it's a really interesting time right now for strategy obviously and for the Bitcoin treasury company industry at large. I mean, I tweeted something to the effect yesterday. There's literally ads of every company will all again since then.
Harvesting that volatility and writing options against them. We've been really active this week, John, in call selling, and I think everybody can kind of follow us into that trade and take advantage of it. Okay, well, we got a committee member making moves right now. Bill Baruch joins us on the phone. Bill, you brought more NVIDIA ahead of the print. You've also added to your Oracle position. In this market right now, what's your thesis around AI infrastructure?
I think the AI build out has its balance sheet. I mean, this $500 billion financing deal with NVIDIA mitigates the bear case. One reason here's three reasons why we're adding NVIDIA right now. One, it's 7.25% in our portfolio, and it trades about 7.75% to 8% in the S&P. We were underweight NVIDIA, so we bumped it to 8.25%. The next thing, this thing trades at 20 times forward. Earnings growth over 100%. The main bear case being mitigated, we think the fundamental warrants significant multiple expansion. And then finally, the price action. The 200-day moving average, when the market had weakness through the end of July, and it's still rallying and towards these highs, I think they're going to reach. The weekly looks great, and this typically can run up into a 30-short. So I expect it to breaking out the new highs. Oracle, now there is some technical resistance that's trading to right here, 155 to 165. But I'm excited about the NeoCloud story, and there really is no better NeoCloud than Oracle. They're premier cloud provider. Trades at 18 times forward. I think some of the software headwinds they're mitigated right now, and it's AI 16, Oracle 16. So this is a name we want to increase in our portfolios.
There's some leverage issues here too. Steve Weiss, I wonder your take on this, because when you're in NVIDIA and then you're out, I don't know what your position is on it now, but I know you were recently on Meta, and Meta has become not exactly a neo-cloud, but they've been talking about selling some of their capacity down the line. They've started playing in this open weights game, which is certainly very much related. What's your reaction?
All right, Netflix looking for more upside. Netflix looking good here, breaking out. It's above the 50-day. 50 days overhead, 200 days here.
In terms of NVIDIA, I actually bought NVIDIA last week. And the reason I bought it is because it was doing nothing. The semis were building, it was lagging. I thought it'd be a big trade. I'm undecided if I'll be there for the quarter because they always report great quarters. They always raise guidance. And guess what? The stock usually trades up.
Okay. NFXL.
They stay with all of it.
NFXL.
I still have Taiwan semi. It's still a major position. My largest position alongside actually. And look, all roads go back to Taiwan semi. NVIDIA has a great partnership. And one of the other reasons, this is kind of funny that I got back to NVIDIA. There's a podcast called Wired, which I recommend you watch, you listen to. And they did the NVIDIA story with Jensen Huang beginning up to now. They also did Taiwan semi. So when you really get to know Jensen Huang, not what we've all seen on CNBC and his meetings, but how he started, and how he's such a gambler with such conviction, and he's always been right. So look, I thought that inspired me to get back involved as well.
Conviction's a good word for him. I do know him a little bit off camera as well as on. Bill, last word to you on this one. How should we think about NVIDIA from an investment perspective at this time? Is it like Apple and the smartphone sort of realm and age? Is it like Amazon in e-commerce? Do you hold on to
Netflix looking good. trying to break out, changing direction.
Three of our portfolios going all the way back to the end of 2022. Yeah, I think it's something to hold on to. The volatility of the name has been muted. I think it's ready to take the next leg. I think that this news of the $500 billion financing, I think NVIDIA is the top beneficiary. And I think they're essentially sort of collateralizing their GPUs. I think it's great for the long-term story. And then I'm extremely bullish on compute. I know Steve has been trading very sharply in the past few weeks. 2027 story on compute. I think that Oracle is something to capitalize on. Also, I personally trade the names like NVDA CoreWeave. I think there's a really great tailwind behind the compute story that are going to continue into year end.
Lots of money flowing into construction of data centers. Bill, thank you. Speaking of construction, Kevin, Caterpillar, it's part of this overall story as well. Buying it? Yeah, we are, John. We're adding to Caterpillar here. I know Steve liquidated the position recently. There was a pullback. We're taking the pullback as an opportunity. This was a name similar to what we talked about with Microsoft a few minutes ago. We've owned it for well over a decade, trimming into the massive strength as it traded very much in lockstep with the AI positioning. And then when the tech trade pulled back, we saw an opportunity here with Caterpillar. So again, the first time in a long time that we can add to it. This is an investment for us. I think it's cheap. They blew it out of the water this quarter. And when I say it's cheap, I put a little asterisk there because as a value investor, you look at that PE ratio and it takes a little bit to handle that. And I feel like this company is maturing to the point where it deserves a little higher valuation.
So no call rating on this. You're gonna let it run at mid-20s, high 20s for multiple. I'm just asking.
Yeah, no, I could be really clear on that. I think if we see a little bit of a pop on it, we will be writing calls against it because this isn't something that I'm expecting to see the name move up another 20-30% from here in the short term. This is a long-term investment for us. I'd like to see a little volatility so we can get some premium out of it. Tell me about, I never talked about this with you, this cover call strategy, because it seems like it's kind of like, well, I expect this to run, but maybe not too fast. So I'm willing to take something out and put it, cash in right now. But you're not necessarily writing calls against your entire position. So, how do you think through how much you're going to write calls against something? So thank you for that question. I'll go.
Okay, S&P turning back up. S&P.
Tactical on how we write calls, John. We don't sell covered calls on every position all the time. And really, the way I answer Jim's question about how I feel about it has absolutely nothing to do with whether we cover the position or to how much we cover. So we look at the inherent volatility, the internal vol of every position, every single day of every stock. We'd love to write a cover call against every position, but you wait for some volatility. Sometimes it's around earnings, could be around a dividend, but not usually. There's some type of news events. Some sectors have greater vol than others. So like technology is usually easy to write a call against. Traditional industrial like Caterpillar is usually a harder name, but over the past few years, it's traded a little bit, like I said, in lockstep.
Guys making good points.
So we've had opportunities there, but it's always a volatility spike that gives us
Netflix.
that premium. And that's something that we're waiting for with Caterpillar. When we see it, we'll have an option against it. Weiss, I know that you don't like Caterpillar as much. At least I take it based on your recent moves. But you're buying. What is it? What is it you buy? Leidos.
Yeah, Leidos. And you did sell Caterpillar and my company at, to that point at much higher levels. So great company. I just thought it was overvalued. And we had a tough time holding that valuation. Leidos I had exited.
With Palantir dipping a little bit. All right. SK Hynix dipping. Intel dipping.
They had a list of 10. And they went to these 10 companies, Booz Allen, them, and some large ones, and said, you got to give us something back on the contract. So that put them under pressure. Then there are some other issues in terms of a recompete for the veterans, hospital, their technology there. But I entered into, I bought it, I'd like to tell you I bought it before the quarter, but I bought it on the quarter when they
AT&T.
I've always had the utmost respect for the management. Tom Bell being CEO of the company, done a phenomenal job. And when you take a look at this company, most people think Okay, it's just the airport detectors, the metal detectors.
GIPR.
It is so much more. For example, their cyber business and acutely, their red team cyber is $1 billion business. That's a big business and it's growing phenomenally well. It sits on top of the LLMs. So it sits on top of Mythos, sits on top of GDT5. And it finds the vulnerabilities and it cures the vulnerabilities as it's doing. So that's just one part of the company. The other parts of their business, this is really a technology company, are doing extraordinarily well. So I think the price is way undervalued, and I'm going to stick with this one. So it's a core position, it's a large position. I like it.
AI security is certainly a hot area. We got a news alert on Jeff Bezos. Let's get to Alex Sherman with those details. Alex.
Yeah, John, this is a big week for the sale of historic sports franchises. First, it was the Lakers, and now the news coming out just a few minutes ago that Fenway Sports Group is selling a minority stake in Liverpool, one of the storied English soccer teams.
Netflix.
At a $7.1 billion valuation to a consortium
Could
called
Netflix no follow through yet?
Of which Jeff Bezos, I'm told, is kicking in more than $1 billion worth of the equity. Now, here's something that you will learn exclusively on CNBC. With this deal, I am told that there is conditions in the language that would allow this consortium to potentially become the controlling owner of Liverpool in the next 12 months for a valuation of about $8 billion. So that is not necessarily going to happen, but it is built into the language of the contract that it could happen. So in fact, Jeff Bezos could be part of this consortium that would become the controlling owner of Liverpool, again, at a valuation, I'm told, of about $8 billion. But today's news is the minority stake at $7.1 billion for about 1/3 of Liverpool.
Jesse and Lauren enjoyed that World Cup game. I have a lot. $1 billion. It's a lot. Alex Sherman, thank you. Up next, more committee moves. Steve Weiss is leading into this year's top performing sector. I'm going to tell you about his newest buy when halftime comes back.
MDXH.
AEBA.
Okay, looking for S&P to continue.
GIPR.
S&P 500, looking for that to continue. Pushing off the low. Looks like an inverted head and shoulders for now. We'll assume this is the neckline, the VWAP. VWAP is the neckline for now.
MDXH.
SK Hynix, still sitting in the top. Sitting in the top of yesterday's range. Hardly pulled back at all into yesterday's range. SK Hynix showing strength. Okay, SK Hynix, there we go. We tagged 170. I had a limit order on that got filled earlier this morning. Wasn't paying attention. I was looking at Tesla. Tesla's still climbing off the low.
A 30% stake in Liverpool Football Club, but there's also some outliers here as far as valuations goes. It's not like outsized valuations, but at the same time, will the consumer come back into play? Will that negatively impact them? Will we see cloud growth rates kind of slow down a little bit?
7790 is going to be resistance now, S&P. About three points to go to get back above 7790 if we can.
It seems like every segment of their business is doing well. And then don't forget about the advertising side of their business. On a yearly basis, that's above $60 billion a year now. So that's become another driver along with Amazon Prime.
Okay, let's check out some example trades. Kevin, start us off, please.
Yes, I have a paper money trade that reflects a bullish posture in Amazon. I went out, this is a pretty basic way. I don't want to say anything is basic with options, but I went out 3 weeks to the September 4th expiration and bought the 265 calls, just a dollar or so out of the money. And then I looked at the expected move and sold the August 21st, 272.5. Now this is pretty tight. It's only $7.5 wide, but this is a bullish play and it's a 2-week spread if you look at it. So you will get the chance to extend duration, but I spent about $5.75, probably trading about a dime, a little lower than that now, probably somewhere about $5.65. But this is one that you're looking for a move towards 272.5, and you do.
All right, we're coming up against 77.90 GEX. Okay, we're coming up against 77.90. That's resistance from below. Okay, we're right there.
Yeah, let's break this one down. Bullish call diagonal, going out about 21 days of expiration, buying the September 4th weekly options. The 265 strike call, as Kevin mentioned, just about a buck above the current share price in there, so just slightly out of the money. And then against that, the near-term August 21st monthly options that expire in just 7 days, sell the 272.5 strike call. So bullish $7.5 wide call diagonal. You're paying roughly about a $5.75 debit. There's your risk. So it's less than the width of the call diagonal, right? Diagonals are a combination of two different strategies, right? A vertical, embedded vertical with a calendar spread. So it's got a little bit of duration on this. But a $7.5 wide call diagonal, paying roughly $5.75. There's your risk, $575 per spread. Anything above about 267 is going to be potential profitability on this. Kevin mentioned that you can extend duration on these types of strategies by rolling.
S&P pushing back up against resistance now.
Right? Amazon's one of those names that has 3 weekly options.
Just tagged it.
So you might roll to the August 28th weekly options, but you could roll to the August 24th weekly options. There's a multitude of potential rolls or adjustments to this, creating credits hopefully on each one of those rolls. That increases potential profitability and reduces risk every time you collect a credit on them. Now, you can see here from the risk profile, Kevin wants the stock to go up towards 272.5. That's where you're going to get max profitability. But because you're paying less than the width of it, anything above about 267 is going to be profit on this directionally bullish example trade that Kevin brought us. Kevin, I went a little bit aggressive on mine, but with the current IV percentile down at about 11%. So what does that mean? Well, that means that over the last 52 weeks, we're in the bottom, basically 10% of where implied volatility levels have been, right? So implied volatility's come out of this name post earnings, and as August has been pretty good for equities at this point, with the VIX hovering around the 14.5 level. So I looked at something directional that gives me a little bit of flexibility as far as trade management goes, because I don't have to wait until
We're still banging up against this level right here.
To the September monthly option. So 35 days to expiration. I've given myself duration. I'm going to buy an in-the-money put, the 270 strike put in September. And then against it, I'm going to sell the 250 strike put to offset some of the cost of the bearish put purchase. So a $20 wide bearish put vertical, I'm paying roughly about an $8.5 debit. There's your risk, $850 per spread that can expand to 20 if it goes below 250.
There's just no momentum, no, not a lot of volume.
Delta, right? It's going to react more to downside moves in the stock and start to expand this vertical if we go lower. But my break even at 261.50, Kevin, that's only about $2.5 out of the money to the downside from the current share price. So I don't need, on a percentage basis, that big of a move to the downside, but I'm paying a little bit more because I'm buying it that in the money 270 strike.
Yeah, you've got 5.5, almost
$6 of intrinsic value on that in the money put. So what that does is it makes that break even on that spread much more close to the money. You don't need much of a downturn here for this to become profitable. But the trade-off is that they always are something costs you a little more money, but you still can make 1.5 times your money if you're right. If the spread that you're buying for 8 goes to 20, you're basically more than doubling your money on this trade. But yeah, you're right.
All right, Tesla
vertical, the delta will be a little
headed back up. This looked like a sell program on Tesla.
Because the 270 put is about $6 in the money on that, so it's got that high negative delta. So there you go, Nicole. The bull bear debate. One bullish, one bearish put vertical.
Okay, well, thank you both. And folks, keep it right here because up next, it's cash tax. The team from Lightfolio will join us with their latest sentiment data on Alphabet. Stock of 1 year, 70%. Fast market, we'll be right back. I'm Sam Barnes live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network and schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trades. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, anytime.
My parents didn't really talk about money at all. In college, everybody.
Excuse me. S&P turning back down again.
I ended up with $20,000 of credit card debt. That's when I kind of realized this is about how my
NVXH.
no politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
When you invest, you are not wagering on an outcome and walking away with either a windfall or nothing. You are a participant in wealth creation.
NVXH, NVXH. High relative volume.
Owning beats holding. Discipline beats speculation. And the long run belongs to those who invest in it.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Ladies alongside Tom White. And it's time for cash tax. For that, we bring in Megan Bradley, VP of Research at Lightfolio.
NVXH.
Today, Megan, we're taking
WETO. WETO.
For Google, I think that the cloud data that we're bringing today is really the most interesting because we just saw the company report in July and cloud revenue accelerated, grew by about 82% year-over-year.
WETO, RVOL, 74 times WETO. Okay, $10 stock. HHS, HHS.
Acceleration or deceleration metric. But when you look at this on a 30-day moving average, you can see that it slips a little bit. So we're starting to see a little bit of this acceleration.
Big gap up, HHS. 415 times RVOL. LFS chemistry, LFS. LFS.
You can see that acceleration, that yellow bar on the 30-day moving average for us. And so our data shows AWS
LFS.
steam a little bit, and some of that Google Cloud pace starting to level off
Yeah.
most of it, but again, we're talking about leveling off.
Momentum and volume is basically in these small cap stocks below $10 per share.
Yeah, Megan, I think that's going to be one of the keys.
LNKS, LNKS. Yeah, these are all penny stocks.
It's in third place, so it's got more ground to make up at this point. But when you look at, maybe the stock price versus what the data says, because of their earnings were so good, right? They might have, kind of outkicked their coverage on this one, but it still seems like demand for their cloud products and advertising.
Cerebras is seeing 14 times volume, CBRS, 14 times volume today. Okay, it's mostly selling for now. Cerebras, Cisco, seeing volume, Cisco down a little bit, Cisco. CoreWeave also showing volume today. CoreWeave had a nice little pop earlier in the week. Wednesday, fading today. CoreWeave. Supermicro had a gap up yesterday on earnings. Still followed through.
Still see that tracking with the stock.
Okay, Supermicro trending bullish. Look at the volume. Supermicro, lots of volume here this week.
Next quarter if that growth rate doesn't keep accelerating at the pace that it has. But the other segments certainly are performing, and we still see that as a
Supermicro turning back up.
growth and a long-term bullish opportunity, at least in our data.
SMCI. Volume. Okay. So what was the story? Supermicro, blockbuster earnings. Okay, Supermicro. Do I still have my position in Supermicro? I don't think so. No. Okay. Supermicro. Just chilling.
Waiting on and expecting, but certainly we're seeing Gemini growth being pretty tremendous. I think that this was a story of it went from 400 million users to 1 billion users in about 15 months. So we're still seeing rapid adoption and still massive market share ahead that Google has to steal should it execute. So nice adoption from a Gemini front, but still plenty of improvement to be made.
Megan, a question about that.
All right, I'm going to take a 2-minute break. I'll be right back.
Is this going to come down to, maybe Gemini is going to be preferred from just the casual, person at home on their laptop versus, these foundational models that are more geared towards business and technology? Is that maybe their niche for Gemini? Because, I'm still doing Google searches, but I'm looking at Gemini that pops up right below the search, and it's actually pretty good stuff.
Yeah, I think that you're exactly right. I think that that's what consumers are talking about too. When we look at these mentions, just the way that consumers are searching has changed, and Google has managed to retain those users versus losing it to these other LLMs. And part of that is now when you search in the Google search bar, you can search the same way that you would ask a question, and Gemini will answer your question without you ever leaving, without you having to scroll down and click on a link and try to read through to see what you're trying to find. Kind of aggregates the answer for you. So I think that that's a major reason for adoption. And when we look at our data, whenever we look at forward-looking that Gemini adoption, we have it up by triple digits. So more than doubled on a year-over-year basis. And so that rate is holding, but it still is a smaller piece of the pie just in terms of overall chatter when it comes to these higher end frontier models like you mentioned.
And Tom, I agree with you. I use that as well and find that to be very helpful. A lot of people thought people might be left behind when it came to search, but that summation by AI Gemini has been very helpful. Megan Brantley, thank you so much. VP of Research at Likefolio. We appreciate all your proprietary data that you shared with us. Let's bring Kevin Hicks back in with us and get some final thoughts. Tom, your final.
Yeah, I think, you take a look at their data. Yeah, maybe weakening cloud growth. I mean, that's probably not going to be surprising. They haven't got really difficult comparables. But as Megan mentioned, I mean, the different revenue streams that this company has is pretty spectacular, from the advertising side, which is a big chunk of their revenue. Then you've got Waymo, you've got YouTube, you've got Gemini picking up steam. So their data seems pretty good. Kevin, you look
S&P turned back down. S&P 500 turned back down.
So it's pulled back pretty
Bear flag for now. No relief for the bulls.
Google off, but you're right, Tom. It hit $408. Now trading below 350, right around $345. Tom, so I just looked at a bullish take here on this. Going out, give myself some duration going out to September 11th expiration. Looking at the expected move until September 11th, Tom. I gave myself a full month, about a $22 expected move, Tom. And that's when I just did the 345, 365 call vertical. Trading about $7, trading about a dime lower than that now. But buying around $7, it has a chance to go to $20. So it's almost a triple, Tom, if you're bullish on Google Alphabet. And remember, with volatilities down from where they were, buying Vega is never a bad thing. And so watching like Amazon, those are trades, what? Long Vega. This one, long about 7 Vega as vols are overall low. So after Labor Day, buying vertical spreads, long Vega, and looking for a $20 move to the upside in Google Alphabet.
Yeah, we mentioned that before on my example in Amazon as far as implied volatility levels. The IV percentile rank.
New York Fangs are still just chopping around.
Is 2%. So we're at the bottom 98 level of where implied volatilities have been. And we haven't been this low in implied volatility since December of 2025. So yeah, implied volatility is low. So Kevin looked at a strategy. It's directional, right? In this example, it's to the upside. You need to move higher in the shares to get to profitability on this one. But it's cheaper because implied volatility levels have come in a little bit. But let's break this one down. September 11th, weekly option. So 28 days to expiration. You got a month in this position. So it gives you some flexibility as far as trade management goes too. Buying the 345 call, selling the 365 call, bullish $20 wide call vertical. You're paying only $7. You can make an extra $1,300 if it gets above 365 at expiration, and this thing expands to $20. If you pay that $7 debit, there's your risk, $700. Takes your break even up to $352 to the upside here. That's only $7 above the current share price. It's a $342 or $45 stock. So on a percentage basis, that break even of $352 is not that far above the current share price. And you've got 4 weeks in this position. So basically about a month for this. Now, I mentioned the flexibilities as far as trade management goes. If the stock starts to move higher, gets back above 3.
Yeah. Whatever.
We got some more moves up next. Kevin Simpson just made
S&P still making new lows here.
sectors, those trades next.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
America's superpower is creativity. The ability to come up with new ideas, the ability to express those ideas, and the ability to bring together people as one community through creativity. I think that's America's superpower. I'm Anil Chakravarti. I run the enterprise business here at Adobe.
When I think of America as the land of opportunity for me personally, I am very grateful to America for all the experiences and success I've had and my family has had. I came from India when I was 21 years old. I had the privilege of going to MIT as a master's and then a PhD student. America has been very kind to me. I went from being an aspiring scientist to an aspiring businessman. And only in America you can go from doing one thing to saying, no, I want to do something else. And you know what? The country always gives you a chance. America's success over the last 250 years, one has been around the values of the founding of the republic, liberty for all, the continuation of democracy, and making sure that the expansion of rights to everybody. It has taken through its own twists and turns through the Civil War and through many other historical events to get there. But those values have really sustained the growth of America. Then you go back to creativity and innovation. Those have been critical to powering America's economy and society. To me,
S&P still no bounce here. We're inside of this area here, below 77.90. We got 77.80 and 77.75 now.
you are not taking anything for granted. You will have a tremendous amount of opportunities.
Markets continue to show weakness.
You're going to stop it. So I think that's done. The brand a little bit. And then, listen, people went on and sold their company. So that also didn't help. If we buy this, it's not really. If it ever came up for sale, then would you buy it? That's because the challenges that Coca-Cola's had with body armor. I've seen a write-downs Mexico has taken on some brands that he's bought. Would you ever think of it? Well, first off, I've now started my own. Okay, so are we going to assume that didn't happen? If I didn't have a new business, would I do it? I would say probably. Because I have to take a collective breath and start it. And we know there's still a business there, but it requires a lot of.
All right, markets are just not giving us much to go on.
And that's a lot to have. And even on this journey,
Dell computer, higher volume than usual. Dell volume. Let's see what that looks like. The chart. Dell finally broke out and is just kind of grinding along. Dell finally broke out above these levels that we were looking for a couple of weeks ago. Okay, we were looking for this breakout above this level. We got it on Wednesday, following through, but it's a little bit elevated volume, I guess. Dell.
When you started this business, you don't think I created this kick-ass brand already. I've sold the company.
Clearly can see that we're moving out of growth into value. Small, mid, and large caps. Small cap growth still looks okay. Mid cap growth is still looking okay. But big cap, we're starting to see money coming out today at the highs after 2 weeks higher. S&P 500.
No, you start over.
Doesn't look so bad. If you look at the equal weight index, RSP is at the high. So you can tell it's rotation out of growth into value.
Questions what success is like. Because what happens is you gotta be conscious of
Welcome back. Materials are the second best sector this month behind tech. Kevin Simpson, you are leading into that strength, buying CF Industries, which are behind that. Yeah, John's about as boring as you can get this material. You can't start like that. You gotta make it exciting for us. Well, sometimes boring is good. This is a company, when we go back to the basics and we think about earnings, they just had a tremendous earnings report. Beat on the top line, beat on the bottom line. But nitrogen isn't something that you can just throw a plant up in a day or two or over a weekend. It's a multi-year project. And what I love about this company is that the cheap natural gas that we have here domestically gives them an advantage head and shoulders over their international competitors. This is also a stock from a valuation standpoint that trades at 11 times earnings. So when we're looking for companies that are increasing profits, increasing free cash flow, and having a multiple in the very, very low sub-teens.
All right.
Dividend, but they just increase it by 20%. So dividend growth, low multiple. Jim, how are you thinking about these kinds of companies at a time when I don't remember one like in recent decades? There's so much building going on for so many different reasons. And you've got this leverage picture in tech, which is an arena where you used to not see it, certainly not to this degree. And it's about building.
Yeah, well, exactly. I think that trickles down. We've already seen it in the industrials. Obviously, you were talking about Caterpillar earlier, and I see it in my two materials companies. CRH, which is basically an aggregate / cement company. You know, all of these data centers that we're building, they need cement, they need the roads that go to them, and that plays right to CRH. And then I've got Cleveland Cliffs, which longtime viewers know has been a bit of an albatross. However, I do think it's
the Disney of steel, right?
Yeah. Maybe we'll play with that another time. Okay. But, no, look, I think Cleveland Cliffs is coming out of the penalty box. And it's been in the penalty box for a long time because of an acquisition of a Canadian steel company just before tariffs got instituted. But if you look at the results, they are doing much better. And when a stock comes out of the penalty box, it takes a few quarters of results. And I think we're right in the middle of those few quarters of positive results whereby Cleveland Cliffs will really regain its footing. And if you want to make Steve really happy now, always. Steve, I miss you. Go to Steve. These blocks, but I can't go to that smile. I gotta, I can't. Okay, let's go to Steve. I miss you, man. We keep going to this commercial. Yeah, the only thing I would say is the CEO of Cleveland Cliffs has sold more stock than Jim has in the last few months. So he's a seller, Jim's a holder. So, I got to bridge that somehow.
I'm guessing he's done a lot more of it than you do, though, Jeff.
He does, but I'm just making Steve happy. And,
we've got a nice shirt on. It's Friday. Next, the setup once again. Wait next week. Too.
Jim also do.
All righty. Oh boy.
Welcome back. Let's get a call on the retail sector. Dick's Sporting Goods named a top pick at Wells Fargo. Steve, it's been a top pick for you for a long time, yes?
Yeah, so look, I think it's a category killer. I mean, there aren't many options, and families still want to go to Dick's for the experience, and they're changing their store. So I think it's just a company that will withstand economic cycles by and large, and a great retailer to be at, because you still want to buy that stuff online for the most part. You want to go into the store, you want to go with your kids, and you want to buy them their gloves, their cleats, everything. So that's always going to be.
All right. Also, a bunch of retailers reporting earnings next week. Kevin, Walmart not only is like the big kahuna, it's almost like an economic report. Yeah, I like the way you phrase that, John. I think this is the
What's Tesla doing? Tesla, didn't follow through.
listening for their guides. I want to make sure that they continue to serve the clients and the customer base, even as the consumer base slow down. So, and how much of the customer base is over 100K for sure. We got final trades coming up on halftime.
Slow day today. Nice pop early, sucked a lot of people in. Unfortunately, we faded. S&P just keeps making lower lows.
May resume in less than a minute. NVDA NVIS NVIG NVIF NVDX INFQ BNU NFG may rise in 10 seconds.
S&P is still moving lower. We just took out the low here.
NVIS NVIF NVDX NVIG INFQ BNU
Let's get the final trade. Steve Weiss.
Yeah, first of all, thank you for noticing my shirt. Also have my wife's painting background, so Scott says too much last time. Look, I'm going with United Healthcare. Stocks come down a bit from recent highs. No reason whatsoever. As tech goes up, this tends to go down. I think that's a mistake. Very inexpensive here, and the turnaround is still well on.
Shirt matches the painting quite nice. Kevin, I'm going to go with Visa. They're bumping up against new highs, and we think they're the total for global commerce.
All right, Jim. Lockheed Martin, much like energy, which we were talking about earlier, there's been ups and downs all year, but the trend in aerospace and defense is higher. Lockheed Martin.
Lots of retail trade next week. Thanks, guys. That does for halftime. See you again at 3 Eastern closing bell. The exchange starts now.
Thank you very much, John. The small caps continue
Tesla.
their year as the Russell is the only major average in the green today. I'm Kelly Evans, and welcome to the exchange. The Nasdaq is taking a breather and shares of applied materials, ticker AMAT, fall after earnings. Broadcom, SpaceX, and Workday all too. And our guest today is warning that the semi space is in a bubble. We look forward to that discussion in just a moment. But the small caps continue to outperform. The Russell 2000 hitting a new all-time high today, bringing its year-to-date gain to 23%, outperforming the Nasdaq, which is up less than 15%, and the S&P 500, which is up nearly 14%. Plus, we'll talk about this no-good, very bad week for prediction markets. We'll wrap up the news flow and see what measures may be next. But we begin with the S&P 500 heading for its
SPCX is turning.
caps, which are absolutely flying this year. Mark Dizzard is the CIO of Huntington Bank, and he's here for our opening exchange. It's good to see you again. Welcome.
Good to see you, Kelly.
You know, we don't need to like overly talk about small caps, but I mean, there are so many investors in this space who are thrilled. And at this rate, they're going to be up 40% by the end of the year. Did you have any kind of broad thoughts about that?
Yeah, we actually love small caps. It's one of our tactical positions that we're overweight. And what you're seeing is that broadening of earnings. I mean, it's definitely happening in large cap too, across different sectors, but it's happening with small caps, it's happening with mid caps, it's happening internationally as well. So I think it's that broader earnings story, and it's setting up really well for small caps.
A lot of people do say the Russell 2000 has become somewhat of an AI trade. Is there some truth to that with some of those smaller kind of, component makers and tech players that feed into the AI trade?
There's definitely some truth, and from my opinion, there's definitely some truth to that. In the AI ecosystem, the way the technology is going, you can see it play out. The hyperscalers moving to the chip makers. What's the next phase? Where are the implementers? All the other pieces.
Implementers, I like that. Talk about that for a second.
Yeah, I just think that's where the AI trade has evolved to. So you're also going to see it in large cap. So when all the hyperscalers, and I know we can talk about the capital expenditures and how much money and is that going to be profitable in the future, but that was kind of phase one. Phase two is really showing up in the chip makers, and you're seeing that next piece of it. The chip makers ran huge, parabolically in a lot of ways. And now the next piece is who's going to be doing the implement. So it's using what they've built with the compute power, using the data centers, but actually impacting businesses. So you're going to see it spread out to industrials, materials, energy companies, all the other sectors. Small caps also going to play a role.
And I wanted to ask because there is an AI component to that, but you're right about the broadness too. Just yesterday we were talking to Jonathan Krinsky, and he saw the Russell 2000 restaurants having one of their best days ever. They had this breakout move, Texas Roadhouse and so forth. And just to make the point, if people wonder why are small caps suddenly doing so well, I mean, the answer, I guess, is there's a lot of reasons. Lower rates certainly help. So where do we go from here? Do you pile into those, to the small caps? Do you try to look, like you're saying, to the implementers? We've had industrials, we've had financials kind of pretty much all-time highs lately. Do you have to overthink it? Can you just own the S&P 500? You still have 14-15%.
I don't think you have to overthink it too much, but I do think you have to play it with some caution. I mean, I call it the momentum pendulum, and we've seen it all through this year. January, February, technology wasn't doing well. Investors rotated out just to miss the next part of the technology trade. We're seeing it now with some of the sector movements that you're just seeing from week to week. Different sectors are outperforming, and that's causing investors to question. So keep diversified. That's where you don't have to overthink it. Definitely still have exposure. When we think of small caps, you mentioned Texas Roadhouse. The immediate thing that jumps to my mind is, okay, retail sales. Where did you see actually some positive pieces of that? Restaurants, bars, spending outright, the experiences. So even within small cap, large cap, you're going to see some of that where the consumer's still healthy.
And I want to rattle off it. Not that you're going to overly focus on these names, but areas where, I mean, you guys do like CrowdStrike as cybersecurity remains a huge theme with agent traffic and all the rest of it. You're still looking at Intel for this turnaround. Same thing with Target. You have Coke and Clorox for kind of their defensive quality. And then let's go back to some of the names in this infrastructure monetization trade. Maybe you can rattle them off better than me, but I see, is the ServiceNow is in here? Is one of your picks? I'd love to hear about that, especially in light of this possible private equity bid for Workday.
Yeah, ServiceNow is still in there, and it
goes to for that theme that I've been talking about is that next phase of implementation. So someone like ServiceNow who's already integrated in enterprise, I know, right, software, and that's been up for debate all year long of what's that going to look like in the future. But something that's already integrated into enterprises that actually executes on the efficiency of AI and how that gets implemented in companies we think are poised to do well. That also translates over, I know another name of Vertiv, for example, right? It's not just about building more data centers. Now it's about making the data centers more efficient. They're going to have more racks. They need more cooling, more efficiency, more energy. How do we do that? So it's that next leg of just not just building.
Just a fade all day.
Final comment, I'm going to jump the gun on our next discussion, but just to get your thoughts on it, kind of to set it up before we do, semiconductors, let's say they're, I don't know if you call it in a bubble, maybe richly valued. In some of these names are up 1,000% if you lump in the memory names as well. What happens there if there is a further breakdown of momentum rotation like you're talking about?
Yeah, I wouldn't classify it quite as a bubble, but there's going to be some reckoning at some point, right? They can't just continue to go and go and go. The way that I view it is, what do earnings look like next year? And it's only going to get more difficult and more challenging. Investor expectations are going to be higher, and that's going to be paired with the amount of capital spending, and does that show up in revenue? So as long as there's demand and the business investment is leading to that demand, then that's okay. But the comps are going to get harder, and that's where it's going to start to be more challenging.
I thought Lisa Shallett made a fascinating point yesterday where she said she would actually say if they do see a reset, a bigger drop, the semis, she said own the own the big tech companies, because that's going to help their margins. So it was fascinating. And that was one of her big calls. I don't know if you would agree in terms of how the big tech ones are positioned.
I think that's actually very appropriate. I can see that dramatic kind of benefit right away from that. Again, it's kind of that supply and demand imbalance and where that lays in any given week or any given month. But I think that's exactly right.
All right, Mark, thanks so much. It's good to see you today.
You too.
Get that school open. No, we won't go there. This poor man, months delayed for kindergarten. All right, Mark, this is there has been plenty of debate about whether the markets are in a bubble or whether earnings themselves are even in one. Our next guest is here to try and settle that debate, and he does find areas of the market that are in, we call it, bubble territory. Dirk Weiler is Citi's head of macro strategy and asset allocation. Dirk, it's great to see you. First of all, what's your framework? How would you lay this out for us?
It's a good question. I think right now we're going to give a standoff between the chartists and the fundamental analysts, really, honestly.
S&P trying to turn, obviously. AMD looking better.
Price-minded, you think it did already broke down after a huge move. It went up 80%, more than 80% in one quarter. The last time that happened was in the first quarter of 2000, and that didn't end well. And so that's, I think, the debate that's ongoing. Now, I think you need a definition, as you point out before. You should just use that word too lightly. So our definition is, if something goes up more than 2 standard deviation against the long-term trend, inflation adjusted, it enters bubble territory, and the SOX has done that as of April. Now, it is as alarming than it sounds, because whenever you enter a bubble, there's usually a fair amount of upside left. And it's not a bearish sign. The bearish thing is actually when you exit the bubble territory. And so our message is not so much, listen, you have to be bearish. Semis here, our message is more, listen, you will give back a lot of the gains you're making in the semis right now. And so it will not, there will be payback time. I think that is more the message, which means to us, you have to have risk management and maybe some hedges in place rather than being out of the market.
I love the way that you're describing this. Let me just kind of, recapitulate it. So you're saying for you guys, the bubble indicator is when your 2 standard deviations over your long-term trend, which the SOX, that's one of the semi gauges or indexes, entered as of April. And you're saying, and this is so true, isn't it? That when we enter that bubble territory, there can be lots of upside left, but it's almost a warning that whatever upside you capture, you're going to be giving it back on the downside in a reset. So because a lot of investors look at the multiples in names like the chips, like memory, and they go, I'm protected. They say, I'm only paying 7, 8, 9, 10 times.
That's very true, and you already hinted at that debate in your opening remarks. That the reason why our methodology is price-based rather than valuation-based is, of course, because the public can show earnings, and then if you use prices, you don't care whether it's a valuation bubble or earnings bubble. Your model triggers. It's of course a big debate, but I would say on the earnings side, right? If you look at a Cape Shillow type of valuation, then it also looks extremely expensive, right? So if you smooth out the earnings, then you get the same conclusion as if you use a model based just on prices. So there are valuation models that tell you the same thing. If you, of course, think you can bank the earnings that are currently in the numbers for a long time, then yes, of course, this will really reassure you and tell you you are protected. But that's not clear at all.
And I should also note, you guys were running the Kospi as well. You don't see as much of a risk there, interestingly enough. Is that right?
Well, no, I would say that it's different. I think the data quality is much cooler in the Kospi.
Okay, stocks are starting to show signs. Maybe they'll turn. Stocks showing signs.
Episodes that happened in the 80s and history. So it's a similar pattern. They're very similar trade, the Kospi and the SOX.
Go back to the SOX, because again, I think this.
All right, looks like S&P is going to bounce here. SPCX, SpaceX on the move.
It does seem like in some cases these days
Okay, buyers showing up.
For instance, you talk about the 7 generals, as you call them, in the semi.
Yeah, thanks, Rob. I thought the same thing.
TSM is what, Texas?
Okay, Kelly Evans.
Country, so you love it. And of course, it is also the home, in addition to producer James, it is also the home of the Nassau County executive who is currently running for governor of New York. And even though Donald Trump lives in Florida now, he is a New Yorker. God bless him. And he really does care about what happens to the future of this state. So Bruce Blakeman, this is also to support him. But you know, I think what the president is trying to do in talking about crime today in he stays on message is trying to turn the page from a very unpopular economy right now. And that is the problem. Usually Donald Trump would turn to immigration for the economy, but he's underwater on both of those things right now. So he's going to the third choice, which is crime. Unfortunately for the president, it is very, very hard to turn the page on the economy because whether people are Republican or Democrat, as we saw in Rick's favorite consumer sentiment from UMash today, the numbers are way down amongst Republicans, Democrats, and independents. People do not feel good about the economy today.
Yeah, I'm glad you mentioned that, Jeannie, because you're exactly right. In July, just a month ago, Republican sentiment was at 88.2. Fast forward to this preliminary August read, it's down to 78.7, a 9.5 point drop. You saw deterioration less
All right,
so, though.
SpaceX looking really good here.
3 points for Democrats as well. That's probably not a trend you want to see as we're getting closer to the midterms, right? Could the president try to course correct, at least in some way, in his remarks in Long Island this afternoon?
Well, I'm a cynic. You know, I think he wants to play golf this weekend. So it's like, where's the friendliest crowd I can get people to the golf course?
Well, the crowd he's going to right now, Rick, sorry to interrupt you, appears to be reporters who are gathered beneath the wing of Air Force One. He's showing them a piece of paper, and if we can get our ears on that, it'll be interesting to see what exactly it is that he felt was so important. He had to go talk to them about it before he boards the aircraft.
All right, SpaceX is going here. Okay, let me see if I can get some more SpaceX. What do I have? Yeah, that looks good.
Can't hear him that well, Joe.
Yeah, I'm not hearing him either, but I want to see what's on this piece of paper. We got to zoom in.
SpaceX.
James, talking with folks who were waiting to rate him on the
SPXU
at Joint Base Andrews on his way to Long Island. He's been known to pull out the blueprints for any project he's working on, and this appears to be prescription drug prices, which brings us straight back to the affordability issue. Kaylee, maybe this is something he plans to incorporate into the speech today. Looks like we don't have good audio on this, unfortunately. We'll have to play this back, get a better sense of what he said. We should note, though, that Caroline Levitt is with him, Kaylee, and maybe one of her final trips with the President of the United States.
She's just got a few weeks left, as she said, to depart at the end of the month. As Joe says, unfortunately, we can't hear the president well right now, but fortunately for us, we can't hear the thoughts of Rick Davis and Jeannie Shanzano. Rick, I'm sorry for interrupting you. Please continue what you were saying.
Well, notwithstanding the mimeograph that he's sporting around in front of the press right now, I don't think this would be considered a really significant event when it comes to trying to change the tide of the midterm elections less than 80 days away. Look, it's the dead of August. Nobody is paying much attention to this. Smart people are at the beach trying to beat the heat, and the president's probably going to be playing golf this weekend. So we've sandwiched this into the agenda and give them something to talk about to try and, cap the weekend. Maybe drive the Sunday shows, but I don't think anybody thinks it's going to take away from the really bad news that you pointed out, Kaylee, about the consumer sentiment, the retail sales, the deficit numbers going up. There's been a whole raft of big glaring issues, including the prices of the 30-year bond. There are real trouble signs in this economy, and he wants to talk about the golden age. He is so off message. He's going to have to retreat on this if he expects to win Republican seats back in Congress.
He's getting on the airplane right now, Jeannie, making his way up the stairs. I guess whatever presentation that was a pretty brief one. He's still got that piece of paper in his hand that apparently has to do with prescription drug prices sinking on behalf of the administration's efforts. As he gets out to Long Island, this will be a pretty quick trip. I think he was scheduled to speak around 3 p.m., I guess presumably to Rick's point, before a golf game. What's the best case scenario here? You get
So freaking hot yesterday.
Responders that you can use later on in the midterm campaign, or is this really just an excuse to golf?
Best case scenario for his campaign team is that he stays on message. He talks about crime numbers. He talks about, as he's trying to do there, it looks like prescription drug prices, and he talks about what he's going to do about the economy. However, last time he went out to a rally, he said things like, we may need to send oil prices higher amid the war in Iran. I mean, just blatantly taking credit for higher oil prices. He's got a Treasury Secretary, and I heard Mike McGee mention this earlier on your show, saying there's no such thing as a K-shaped economy. That's over. That's done with. We're in a C-shaped economy. And, to add to the litany that Rick just gave, today is the birthday of Social Security. It is 91 years old today. 91 years ago, Franklin Roosevelt signed it into law. It's going to run dry by the time I need it. Joe Matthews, unless Congress does something about it. Why not have the president talking about that? What he's going to do about that? I mean, I wish Democrats would have done a lot to talk about, but I'm not feeling confident he's going to stay on message, and he really does want to get to the golf course, and I can't deny that.
Well, Rick, if you want to keep funding Social Security, at least right now, you have to keep borrowing and issuing new debt. We've seen some big figures on the auctions this week. The 30-year auction yesterday was at the highest yield since 2001. This isn't a sustainable trajectory.
No, it's not. And everybody in Congress knows it. There's been no effort to try and rein in federal spending. And now we're seeing the results of that with these high bond yields. And a lot of bankers are starting to say, stay away from bonds with this kind of deficit, $40 trillion and more this year alone. Excuse me. I can't swallow the amount of debt that the federal government stuff is taking these days. It's a real troubling signs. And, there are a lot of things that we know. One of the things we know the best is the debt market tends to send a signal to the White House, and they need to start listening to that signal.
All right, Rick Davis, we appreciate you trying your best. And Jeannie Shanzano, thank you both so much, our political panel on this Friday edition of Balance of Power. And we'll have more coming up live from both Washington and New York today. Tom Closa, Chief Energy Advisor to Gulf Oil, straight ahead here on TV and radio.
This is it. The trade that will make your day. This is what it's all been for. The daily commutes, the endless market monitoring, tracing patterns, tracking flows, auto boarding, copy crashing, working orders. This is the trade you've been waiting for. Next generation speed, automation, and integration. This is the fixed income EMS that will make sure you Bloomberg trade units. Expect this. Tailor the platforms to your unique needs with nearly endless customization.
Others come in egos. We see the era of billionaire athletes. Bad to some. The future of money to others. We see crypto's trillion-dollar swings. The end of jobs. The end of human struggle. We see the endless funds fueling the AI hype. While others follow the noise, we follow the money.
Introducing the AeroPress XL Clear, 3-in-1 flavor technology with double capacity in crystal clear or tinted clear Triton, a new standard in coffee flavor. Smooth like a pour over, full-bodied like a French press, rich like espresso.
Okay, S&P is starting to climb. S&P is starting to reverse.
What if your doctor was just a single message away? And what if your doctor was the best AI doctor in the world? Doctronic has already helped millions of people and can help you take charge of your health today. Doctronic.
Introducing AeroPress Go Plus, the 3-in-1 flavor technology. A complete travel copy system. Just unpack, brew, and repack. A new standard in coffee flavor. Smooth like a pour over. Full-bodied like a French press. Rich like espresso. AeroPress. Press for better coffee. Use code GO20 to save 20% off at AeroPress.com. It goes here.
Yeah, yes. I think it was right around here, which I was in. So was it Paradise I had or Gattaca? Maybe somewhere in the middle.
It's 121 on Wall Street. We do check markets all day long here. Bloomberg with the Dow, the S&P, NASDAQ, all in the red. We are seeing a gain in the Russell 2000 index of small cap shares up right now about 0.4%. To be sure, we're on track for another weekly gain. That's made it 3 in a row with the S&P 500 index on the week, up by 0.3%. But Wall Street's wrapping up the week. Stocks are falling. Signs of a slowdown in the main engine of the economy, reinforcing bets that the Fed will hold rates steady to prevent further weakness. S&P down 18 right now. There are 2
All right, hanging man candle so far. S&P, SPCX, SpaceX.
Again, Russell 2000 index of small cap shares up by about 0.4%. The 2-year, 4.16%. The 10-year currently yielding 4.69%. We've got the 30-year, 5.26%. Spot gold up $31 the ounce, higher by 0.7%, 43.81 the ounce. West Texas Intermediate crude ahead of the weekend, ahead of Mount Closa. Right now, higher by 1.2%, 82.23 a barrel on WTI. Barrel of Brent, 88.26 right now. Brent global benchmark up by about 1.4%. I'm Charlie Pellet, and that, my friends, is a Bloomberg Business Watch.
I appreciate that, Charlie. Great to see you. And he'll be back coming up in about 20 minutes with another read here.
Oh, boy.
Great. You heard Charlie say it. We've got a couple of important numbers before we talk to Tom Closa. WTI, West Texas Intermediate crude is above $82 a barrel. It's up a little more than 1% right now. So is Brent. $4.07, the national average for gas. And if we've learned anything from Tom Closa, it's not crude oil that is the story right now. It's the distillates. Gasoline at 407 in New York, where the president is today, 414. A gallon of diesel, Haley Lines, $5.42. And as we know, the economy runs on diesel.
Yeah, that's absolutely right. And if you want diesel, you need refiners. And that really is where the kink in the chain seems to be right now, as Tom Closa has warned us before and very well may warn us again as he's joining us once again on Balance of Power. He's a chief energy advisor to Gulf Oil and is back with us on Bloomberg TV and radio. Tom, it's good to see you as always. That was the message you brought last time we spoke, that you have to watch diesel and that there could be even more pain there coming. Is that still the case? Seems like Tom may be having a little bit of difficulty hearing us. Of course, Joe, as we consider the picture for diesel and where that refining capacity is, and it's not, one of the big challenges is Russia, because Ukrainian drone strikes have been targeting Russian refineries. And add on another layer to this as we consider potentially sanctions that could go on Russia, or secondary tariffs on buyers of Russian oil if the sanctions bill passed by the Senate goes through, and then the U.S.
SPX. Imagine if we blow this out
against Iranian oil
and take out the high of the week. That would be awesome.
The Treasury Secretary Scott Bessent's promise of further economic isolation for Iran.
I think Tom Closa can hear us now. If that's right, James, Chief Energy Advisor for Gulf Oil. It's great to have you back, Tom Closa. We've been learning lessons from you as we speak here. I don't know if you could hear our conversation earlier, but when you've got gasoline above $4 a gallon still, and you're looking at $5.42 for diesel, I know you've pointed us to the distilled products here. Pay less attention to the crude. This isn't going to change, even if the price of crude starts to come down when you consider refining bottlenecks, right? How worried are you?
Yeah, I don't think it changes. And, you know, one thing that's been missed is that we're down about 7 to 8 million barrels a day of refining capacity, much of which was knocked out by drones. And that means less demand for crude. So, yeah, crude oil prices are in the 80s, but guess what? The price of diesel is about $180 in every corner of the country without taxes. You know, we are looking at the most expensive harvest season. You know, I live in New Jersey, so we don't harvest much of anything. But, you know, the rest of the country, you're looking at prices that have never been this high ever.
Well, so if they've never been this high ever, and we're considering the trajectory of where things will go, a lot of that may very well be dependent on crude influencing the price of products. And that brings us to the Middle East, Tom. If we consider the U.S.'s promise via the Treasury Secretary Scott Bessent to unleash a new campaign of unprecedented economic isolation against Iran, do you interpret that to mean potentially putting secondary sanctions on buyers of Iranian crude? What would that mean for global energy markets?
Well, I think it certainly means we're not going to have full and unfettered access to crude oil, whether it comes from the Persian Gulf or the Red Sea or comes from the Caspian or Russia. You know, crude oil flows are going to be suppressed. But like I said, if you've got 7 or 8 million barrels a day of global refining that's down, and in some cases it's going to be down into 2027, you don't have as much demand for crude oil. So I really think the refined products, and particularly the diesel side of it, you know, America goes crazy about gasoline prices, but diesel is really the world product. It's the one that use 30 million barrels a day or so globally versus about 26 for gasoline. I did a piece this morning looking at hurricane season, and I got to tell you, it's very, very frightening. All we need is any sort of probability thrown in the Gulf of Mexico, and we go apocalyptic again.
That's the nightmare scenario. Tom, it does appear that this administration is bracing for a longer conflict than it was originally bargaining for. And we've had a lot of experts tell us here on Bloomberg TV and radio that it is very likely this will still be underway in some form when voters go to the polls in November, and maybe as we walk into the winter. And I'm wondering what all of that would mean for heating oil for those in the Northeast and other areas who are going to be looking to fill up their tanks in a couple months.
Right now, you're looking at heating oil prices that are probably be above $5 a gallon. And you can get into crazy, insane numbers like $6 or $7 should there be a hurricane, or if Russia has to import some diesel. You know, they've been exporters of diesel to the tune of about 800,000 barrels a day in past years. So it's a significant crisis, and it's not just agriculture, and it's not just heating oil. You think about everything that moves across the country and moves basically by virtue of diesel or marine diesel in some cases. So it's a problem. You know, the jet fuel shortage or the jet fuel disruption that we had earlier in years gone, that's the good news. The bad news is, in order to ramp up jet fuel production, they had to borrow a little bit from diesel production, and that's the problem for the last 125 days of the year.
Well, so is the only solution to this in the near term demand destruction? At what level is that brought to?
Well, I think, you know, you're seeing demand destruction in terms of refineries. Refineries can buy. If they're going to sell something for $100 or $130, there's no risk in buying. So there's no demand destruction there. It's just the inability to ramp up production that's been lost. I do think we'll see demand destruction in the middle of the valley to a certain extent. We'll have to see how the harvest season goes. We've never had we had a planting season back in 2022 where you saw sky high diesel prices. We've never seen for the harvest season, and that largely takes over, the middle of the country in the next 90 days.
Always great to meet Tom Close-Up in the middle of the barrel, Chief Energy Advisor at Gulf Oil. Tom, thank you. Great to see you. I hope you have a good weekend. As we turn to a breaking news story we touched on a bit earlier, Kaylee Luigi Mangione pleading guilty to federal stalking charges. And of course, going back to the United Health Brian Thompson case from December of 2024. Pleading guilty means he did not make a plea deal in this particular case. And June Grasso from Bloomberg Law joins us right now here on Bloomberg TV and radio. They're going for life in this case.
That's what federal prosecutors say. And that's why this seems so stunning, because usually when a defendant pleads before trial, it's a plea deal, as you said. There's no plea deal here. And the judge emphasized that in court. I can sentence you. You can be sentenced to life in prison. She did ask what the sentencing guidelines range were, and the prosecutor said 24 to 36 years. So look at it, 24 is probably the minimum that he would get. So they're just taking a chance that this judge is not going to sentence him to life in prison, and that they can get rid of the state prosecution by making a motion, which they've already made, that this is
Netflix fading.
New York state laws we discussed before. It is very much favorable to a defendant in a case like this. If the
Netflix fading.
Same circumstance, it then should be double jeopardy. But it's a gamble. I've talked to a lot of people, and they say this is it's a risk because you never know what's going to happen in a court. So I guess the evidence it is overwhelming.
Netflix fading back to the 10 EMA on the 60-minute.
Video, fingerprints, right. DNA, the murder weapon, the manifesto. Right. I mean, they had everything. So you can see why maybe they did it, but it's a risk.
Yeah, well, and as you speak to the question of double jeopardy and the state murder charges, they weren't just stalking charges like was the case in the federal case. Is it likely that his sentencing, if he does get a life sentence, say in the federal case, might shape the decision-making in the state case?
Well, I don't know. The Manhattan DA is pretty adamant that they are going to try this case. They are really upset, you might say, that the federal government went ahead with the deal beforehand. I mean, they were, let's face it, they were not happy that the federal government even brought charges here. This is a typical state case. It's a murder in Manhattan, and arrested
in Pennsylvania, perhaps, but New York City police then took charge of it, the prosecutors. And often there's this thing where, the state does all the work and then the feds come in. So you know that the Manhattan DA is not happy about this and was not happy about it from the very beginning, the feds coming in and trying to take over. So I think they're going to try their best to try the case. But, he's admitted to all these facts in federal court already. He said that he stopped Brian Thompson and shot him and that he knew what he was doing and he had the intent to do it. So one wonders if a judge is really going to allow this to go forward in state court. And the really good defense attorneys here, very well known and really good. So they must feel pretty confident about what they have to argue about, double jeopardy.
Do we have a sense of it that, in fact, did go to trial? What type of evidence we would see?
Yes. Apparently, they have video of from when he came to New York and stalking Brian Thompson. They have video of the shooting
that day.
They have the murder weapon and they have his prints. They have DNA at the scene. They have his manifesto that he wrote saying he wanted to kill someone. Now they have his statement in federal court saying that why he did this. He was in back pain for years and he heard that there was going to be this conference and he researched it. So they have a lot of evidence, and that's probably why the defense decided to take this gamble.
All of 28 years old. It's pretty remarkable. June, you've been great on this, and thank you for jumping in today. June Boston was the host of the great program Bloomberg Law on Bloomberg Radio, which you will want to hear today for good reason. I'm Joe Matthew in New York at world headquarters here at Bloomberg. Kaylee Lyons is in our nation's capital, in our Washington, D.C. bureau. Kaylee will spend some time with David Weston coming up and General Mark Kimmett as we keep our eyes on what's happening in Iran. Stay with us here.
Indeed, we will.
This is it.
S&P pulling back a bit.
Generation speed, integration. This fixed income units that will make sure you expect more from your execution management system. Bloomberg trading units.
Won what? Did your favorite soccer team win? It's about that. I just won $900. 900? For real, there's no way.
Stupid commercial.
Actually, I already successfully redeemed $500 to my bank card the day before yesterday. What? You didn't tell me sooner. Dude, we are officially done. All right. The app is called Gleaming Slots. It's free to download. Go give it a shot. Gleaming Slots. Play now.
So I wanted a new credit card, not a hit to my credit. Good thing Experian has no ding decline. They matched me with cards that won't ding my credit if I don't get approved. So I got the card that I wanted and didn't worry. Get the app from your big financial friend, Experian.
You're sick. You get lonely. When you're lonely, you chat with strangers.
Oh my God, he helped me with the home. That's so sweet.
All right, market's not going very far. Watch Netflix. Watch Netflix.
When your data gets raped, Ron has your login. When Ron has your login, he sets you up with his cousin Howie. Don't date Ron's cousin Howie. Protect your identity with Cloak.
I don't care. Be right where you are.
Say more with words. Words with friends.
Say more. Words with friends. Download it. It's free.
We're still laughing about the ridiculous nutcracker Emily bought today. Funny thing is, if it hadn't been for Carolina Traveler, we'd probably have ended up at the same restaurant we always go to. Instead, we're already wondering where we'll go next.
Everyone has their favorite part of property management. Isn't it time your least favorite parts got easier? With TurboTenant's all-in-one platform, you can manage your rentals from anywhere. Meaning you just went to
maybe.
On Wall Street, we do check markets all day long. Bloomberg with the Dow, the S&P, Nasdaq are all advancing, all declining. It is the Russell 2000 index that is advancing now up by about 0.4%. Looking at a loss on the S&P 500 index, stocks are falling. Signs of a slowdown and main engine of the U.S. economy, reinforcing bets of the Fed is going to hold rates steady to prevent further weakness. The S&P down 22 now, 77.76 where we stand, down by about 0.3%. Dow Industrials also down 0.3%. Nasdaq down 0.5. As I mentioned, the Russell 2000 index of small cap shares up by 0.4%. The 2-year currently yielding 4.16%. The 10-year 4.69%. As of now, we are on track for a winning week for the U.S. stock market. That would be 3 in a row. Spot gold up 0.7% to 43.80 the ounce, and West Texas Intermediate crude 82.50 a barrel now, up by 1.1%. Reddit shares are surging today. It'll be joining the S&P 500 next week. Reddit shares advancing now by 11%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet watching the markets for us. Thank you so much. And as for what we all should be watching, the Treasury Secretary of the U.S., Scott Bessent, says to watch this space for updates next week, potentially, on the United States' so-called unprecedented economic isolation plan for Iran. It seems the administration is looking to pivot to economic pressure rather than pursuing continued military and kinetic options. And perhaps, Joe, it's a blueprint that they're looking at as well in another theater when it comes to Cuba, after, of course, a lot of buzz, especially after the Venezuela operation to start this year, that the U.S. perhaps was going to be considering a military option to overturn the communist dictatorship in Cuba. Our colleague Eric Martin is now reporting that no, in fact, what they are looking to do is economic pressure and ramping up of sanctions.
Using the same playbook in the Caribbean here, Kaylee, and Eric is one of the best at this, and it's a really fascinating story. The Trump administration's strategy when it comes to Cuba hasn't been producing a lot of results. The government has rejected U.S. calls for change. So yes, economic pressure, cutting off all forms of revenue. And by the way, there aren't many left. We've talked frequently, Kaylee, about the fact that they're enduring blackouts and quite a bit of chaos on the ground on the island. But the idea of troops landing there in some sort of Venezuela-esque operation seems to be off the table for now. And I'll tell you, our colleague David Weston, who's with me here at World Headquarters, you sit in this chair long enough, you meet all the celebrities, Kaylee. He's actually seizing on this issue on this week's edition of Bloomberg Wall Street Week. David Weston, investors' hopes for Cuba's economy. What is there to hope for right now?
Yeah, John, I think if you stay here long enough, you will actually find a celebrity. I miss you, Kaylee, but we're happy to have Joe here. So, yeah, I mean, it's nice to talk about economic sanctions, but it didn't work so well in Iran. We're going on for quite a while. It didn't work so well in North Korea. Venezuela, as you point out, was not economic sanctions. Yeah. That was good old-fashioned military might. So we'll see what happens in Cuba. But what we did is we took a look at Cuba. We certainly considered what the various options are. We have an expert from University College London goes through 4 different options, one of which is military, one of which is increased sanctions. But the main question we are asking is, what happens afterwards? There will be an afterwards. What are the possibilities for investment? Particularly, there are a lot of Cuban Americans, as you know, who are eager to go back in there. And so we talked, among other things, with an investor named Andro Madrasky Leon. He has invested a lot in real estate, particularly resort real estate, including in Puerto Rico. He's eager to get back in to his native country, and this is part of what he had to say.
The offering of services in Cuba is obviously significantly limited by how broken that economy is. And so for many years now, the tourism market in Cuba, was not a market that had, 5-star, properties. I mean, upscale luxury was not really something that you saw in a significant way in Cuba. It was a lower rated market. The good thing is that there is a significant amount of existing properties there, existing assets, and existing infrastructure within the tourism industry. I think it requires firms like ours going and acquiring those properties, reinvesting and reimagining and upgrading those properties, and also bringing the operating conditions of those properties to a world-class scale. And so that's the lens through which we're looking at investing in Cuba. Surely there'll also be the development of brand new resorts. I think there will be an opportunity for the development of branded residential product, right, which often is joined together with resorts or other types of hospitality properties. And so we think the future is very bright in that sector, without a doubt, and it's a very important pillar of the economic recovery of the island.
So again, this Andrew Leon, who is an investor in real estate, particularly in resorts. And we talked to various people, all of whom seem to agree on one thing. There are some economic reforms that are being undertaken even as we speak in response to the sanctions. Nobody seems to believe that's going to work. People are very skeptical about that will fundamentally change things. They seem to, certainly Mr. Leon said, there's got to be a fundamental political change to really give investors the assurance that they would need that they can put their money in and get their money back out again. So we'll see, but there's a lot of appetite. People really want to go back in when they get the chance.
Well, it is interesting as I heard what he told you, David. I would imagine, frankly, that President Trump, a real estate guy at heart, is viewing it through a somewhat similar lens.
Yeah, I'm sure that's right. And listen, I don't know real estate that well. I have been to Havana a couple of times on beach trips, actually, back at ABC News, and it could be beautiful. I mean, it's really pretty. And there's a lot of culture there, beautiful oceans and beautiful beaches and things. So I can easily imagine, even as not a real estate guy, and some real nice resorts along the beach there.
Yeah, I was lucky to go to Cuba on a trip for the dedication of the Hemingway House. Back when relations were starting to thaw, and you could get on a JetBlue and fly to Cuba, David. That would also need to be part of this, right? To actually be able to get people.
Well, so it's just be fundamental changes. It's got to come from the United States. We got to let people in. There's got to be a change up there. But I bet you went to the bar, right? The Hemingway bar. Go over there. Exactly. It's a really cool place.
It's an incredibly special place. I'm sure the cars will still be there. But you do wonder what 54 people of Cuba are going to go through between them.
When you talk about these unprecedented economic sanctions, they say it hasn't worked that often in my experience around the world. But the way it works is by hurting the people, and the people putting pressure on the regime, which is what we were told in reporting up this story. And so that you really have to worry about. You're really getting at the regime through the people, and there's a lot of pain that has to be inflicted, I fear, before there's really change.
All right, well, this should be a great episode of Wall Street Week tonight, which you can find, as always, at 6 p.m. Eastern Time here on Bloomberg TV and Radio. David Weston, thank you so much. David with Joe in New York, they've both been to Havana. I'm still here in D.C. I got to get my act together and get out in the world a little bit. But fascinating to have this conversation around economic pressure on Cuba, perhaps being the option the administration resorts to rather than something kinetic. As we told you, it does seem increasingly like that's the direction they're leaning when it comes to Iran as well. The as we hear this kind of rhetoric from the administration, and we've heard similar things from President Trump as well, who just within the last week has suggested low-keying it, focusing more on economic measures. Is it because our military measures were not and cannot be enough?
I think that's true. It's really got to be a combination of economic diplomacy.
All right, Apple's starting to turn back up.
I don't think you can do any of those in isolation. Right. While still trying to work diplomatic simultaneously.
Is it turning down the knob and precision munitions.
Well, it's that, but I also think it shows yet again the fallacy of winning a war through air campaigns alone. There hasn't been an air campaign that's won a war since the airplanes come into the air. Well, with all of that said, gentlemen, it's great to have you back with us today on Bloomberg. What should people be preparing for then? We've had 47 years of economic strangulation in Iran that has not broken the back of the regime. What actually changes behavior? You know, that's the right question to ask. You have to understand with the Iranians, they follow what people call the police model, which is they're not trying to win, they're trying to not lose. And they win by not losing. It's a resistance model. They resist and they show patience. You never hear them say we're going to defeat the Americans. You hear them say we will resist, which means they will take a lot of pain. They're like Rocky. As long as they get through the 15th round and they haven't been knocked out, they think they won. We've seen that with Hezbollah, we've seen that with Hamas. That is the typical way they fight, and us trying to fight it.
Apple trying to turn up, Apple turning up.
That patience is required.
Okay, you're looking for Apple to continue here. Pre-market highs. We had a nice little pop earlier in the day. Volume is coming in. Shorts covering. Apple looking good.
Also required an uprising. And I wonder if that is in the offing here. Is that the strategy, General, that you make conditions so painful on the ground in Iran? It's not just the regime. It's the people who can't take it anymore. And they go into the streets and rise up against leadership.
Well, they've tried that a couple of times, and they have among the most brutal regimes of all. It's a theocratic fascist regime that anytime you have any type of resistance, any type of protest, they would just gun you down in the streets.
Well, it's horrible to consider. And as Joe raises the prospect of not being able to take anymore, of people reaching their limits, we've seen reporting as well that sailors aboard the USS Lincoln perhaps are reaching their own limits as they are dealing with an extended deployment. They've been aboard since November. We're more than 260 days in, and it does seem relief is coming. They're sending the George Washington in to get those troops home. Yet their families had to go to the press to raise concern about these conditions, and the president was actually asked about those stories as he boarded Air Force One earlier this afternoon. Listen to his response.
Oh no, that ship is moving. We know that now. That ship is moving right now, or very shortly, and it's being replaced with another very similar ship. No. Not nearly long enough. Thank you, everybody.
If it was difficult to hear the questions of the reporter for our radio audience, he was asked whether or not they were concerned. He said no. He was asked whether their deployment has been too long. He says not nearly long enough. Is that the proper messaging from the commander-in-chief?
I probably would have used different words, but I think one must understand with the Navy, it's about expectations. These kids and their families plan their entire lives around a 6 to 7 month rotation. Everything down to and including having a family.
I know this. I'm a Navy kid.
Yeah, exactly. And so if the expectation is that you're going to be out there for 6 to 7 months, and then you're going to go back and see your family, and now it gets extended 8, 9, 10 months, and you're on the high seas, it is not, it's not unexpected why those sailors are feeling the way they do. A small number, we hope, but nonetheless enough that it's a concern. This isn't like in Iraq in 2004 when we had to extend some of our troop units indefinitely. When soldiers go off to war, Marines go off to war, it's kind of for the duration as long as the war fight goes on. But the Navy is very, very systematic about the rotations. If for no other reason, it's a supply chain issue. One that's waiting is in dry dock, getting fixed.
Okay, so if it really is ultimately
The replenish underway, you morons. Jesus.
Washington and deployed to the Middle East, what would their expectation be of how long they will be there?
Looking for S&P to continue. If we can get Apple to push a bit higher, Apple.
Manage those expectations. Have they been talking to family? Have they been talking to sales and saying, we hope this is only 6 to 7 months, but as you prepared for this cruise, have you prepared your family for it going a little bit longer than previously?
Well, do you think the leadership has enough information to be able to properly manage expectations at this point? Does the United States really know how long we're going to be at this?
No, and that's what you've got to be honest. You've got to tell your family.
Okay, I got to change the channel. These guys are driving me crazy.
We can't guarantee this is going to be 6 to 7 months.
Love listening to non-military people talk about military reasoning, deployments.
Always the general. Mark Kimmett here with us on Balance of Power on Bloomberg.
Okay, whatever, Bloomberg. Just waiting, seeing if we get any kind of follow through here. The markets.
Better than I can, but as I understand it, Google search traffic is falling. It's getting harder for people, even if they're using the Google platform, to find what they're looking for. So does this represent the evolution?
What I think is true is that AI is a very
Tesla trying to turn up. Maybe we get a little run in today, Tesla.
It is so seamless and so easy to process that you want the next step to be equally seamless and accessible. And so this is in healthcare. We are that platform that allows patients to take that next step after they got educated by AI and immediately see a doctor that helps them fulfill the new their new need that they now better understand.
What would be, give us an example of what you think is kind of the ideal journey that a user might go on, and to what extent am I the Kelly, the human, completing all of this, and to what extent I've yet to use agentic AI, so I'm not. But to what extent, if I begin this, is it meant for an agent to take over that process and complete it?
So I think it typically starts with something you're curious about. There, you start searching something up. You get a lot of information. It feels like, oh yes, that might apply to me. But how does it apply? How does it translate into care? It's really
Okay, watching Apple here, looking for a bid.
So this is where the seamless experience was. Yes, I'm now engaged with my
S&P is on the move. S&P is starting to move up now, off the low. Still descending pattern. Still descending. Descending wedge, if you will.
Thank you for watching as we close out this week.
Apple.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action.
SpaceX still grinding higher. SpaceX looking good. SpaceX.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere.
SpaceX trying to push a bit higher.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind.
Okay, watching SpaceX for continuation here. AMD is driving higher too. AMD is driving higher. Nice recovery, AMD.
Welcome to Market Catalyst. I'm Julie Hyman. 30 minutes into the trading day to look to the
Record-setting week coming to a close.
AMD looking really strong. AMD, thank you very much.
Alongside Kelly, Brian, we've been hearing all week momentum shifting away from tech. Not so fast. It is software, memory, and chips, Kelly.
Copart, yeah. Copart looks good. Copart, I was looking at that earlier, Grover, CPRT. Nice change in direction.
The classic car market, Brian, is shifting gears. More than 1,000 cars are headed to the auction block in Monterey, but it's a good thing in this case. Don't worry. What's hot, what's not, and what's
Looks like it's breaking a downtrend. Copart.
But Homer Simpson, whenever he thinks about a donut, he gets his drool. And donut. I'm looking at those cars, and that's kind of what I'm thinking. We'll get to that with Robert Frank here in a few minutes, but we're going to start. There we go. We're going to start with the markets in your money because we are headed for another good week. And if we close higher on the S&P 500, it's close, by the way. We may not. It will be the index's third higher week in a row. There's a couple of market points, though, that stand out inside the market. First off, your top sectors this week, energy, just blowing the doors off everybody up 7.3%. Utilities and staples also both higher. There's your sectors. But from a specific index perspective, the economically sensitive small caps, they just keep rocking. The Russell 2000 making record highs again, heading for another close above 3,000. Russell 2000 has soared 45% in just 2 years. Wow. Let's talk about all of this with your two smart guests to kick things off. Sylvia Jablonski is CIO and co-founder of Defiance ETFs, and Steve Sosnick, chief strategist at Interactive Brokers. Welcome. Happy Friday to both of you. Sylvia, first off, from a macro ETF perspective, pointing out small caps, where are you seeing your customers, your clients, where is their buying interest right now?
Well, I think you said it really well in the introduction.
I was drooling.
Yeah, totally. Well, not the cars necessarily, flying cars. And why would they be flying cars? Because of AI. So, the flows are right back to AI-powered infrastructure. They're right back to quantum computing. They're back to the AI trade. The single stocks are, the Micron.
Copart.
Basically, everybody.
Let's see, where's Copart?
Around geopolitical news and potential Fed tension, all of these things. Earnings became the clearing event for the market, and here.
What does that mean? Earnings became the clearing event.
Well, the AI hyperscalers delivered, right? I think that the spend is coupled with monetization. Now we got a clear picture of backlog and orders and where the AI trade is going. That money will be coming from this, and the market was sort of satisfied with what they saw. 85% of names meter or beat on the top bottom. And obviously, you're always looking at those innovative parts.
Supermicro taking off to the upside. Supermicro.
Slowing down, or we were talking again about these data center moratoriums, risk being a little bit higher going into the midterms, but then more money. Look at the drone needs today, by the way, on that news that there's going to be tariffs, I guess, that would benefit the U.S. maker. Yes, like an unusual machines, for example, or Shield AI. 21%. Yeah, and I think that, these are names you're talking about driverless pilots and airplanes and drones that take off vertically and can replace fighter jets and things like this. But another cool one, I saw you the other day dancing with a robot. Yes, that's true. China robotics, humanoid robots, generative AI is the brain, and the Chinese memory and picks and shovels are the body. And I think that that's a new sector. But to answer your question more directly, I think that the AI trade is broadening out to different ideas, and it will be things like that.
That's more like wall safety, by the way, with a robot.
This is one of the names you had your eye on. This is, yeah. I mean, there's actually a China robotics ETF coming to the market next week, but it's a lot of these Chinese robotics and humanoid types of stocks that are powering this, and it's going to be one of the new pillars of AI.
Steve, I don't want to be robotic with my questions, but what is the options market telling us? Right? People say, well, don't worry, it's August, low volume. I get it. Been doing this a long time, but I don't care if the market goes up, it goes up. What does the options market say?
It's interesting you ask, Brent, because we've seen the volume in stocks contract, at least on our platform. You know, that it's summer doldrums, we know this. But option volumes remain very, very steady, and for two reasons. Number one, I think a lot of traders use them for income generation. So they're just out there, they're gonna write their calls or sell their puts regardless. And so there's going to be that activity. And plus, you do see the speculation. We've seen call option activity, the skew, the implied volatility for a lot of calls on individual names. I think it's about 35% of the S&P 500, where typically the people are more willing to pay higher implied volatilities for downside protection, for insurance. In this case, I call it FOMO insurance. They want the upside. They don't want to miss the rally. Maybe you're an institutional investor who's underinvested. Maybe you just don't want to be chasing these names at these prices, but you can't risk underperformance, or you just want to speculate because these things seem to go up all the time. So we see a lot of people clamoring for calls, and also a lot of the traditional writers of calls asking for.
Are these more retail, or are these more institutional, or do we not know?
Some and some. It's tough because, you know, there's a lot of what I call pro-tail out there who sort of straddle the line between institution and they're individuals, but they act like professionals. And I mean that in a very good way. So it's tough to tease that out.
Yeah. So broadly, then, I mean, look at this run. The small caps are up 23%, which means they're on pace for a 40% year. Would you lean against any of this?
Small caps have always had this love-hate relationship because you can't short them because the entire Russell 2000 fits neatly into like NVIDIA, basically. So you can't.
I think NVIDIA is actually bigger than the entire.
I think you're right. You can't fight against momentum. But I'm going to say boring actually has been outperforming exciting. We talk about the exciting stuff all the time. No offense, Sylvia, all that stuff is super exciting. But we had our top 10 names up. They're all exciting names. The value stocks, first of all, the S&P equal weight has been keeping lockstep pace with the S&P 500. And if I break up, and two of the ETFs, so I'm sorry, they're not yours, but VONG and VONG.
Take this man off the set. I mean, this is the
VONV and VONG, which are Russell 1000 growth and value, the G for growth. But VONV is kicking VONG's butt. It's up by double-digit percentages more. So we're all focusing on this exciting stuff, but that's just people sort of rushing from
Copart pushing higher. Let's see.
Let's go rush the other stuff.
SMCI moving back up to the highs. Big move back up to the high of the day. Can we get Apple to do that? Can we get Apple to do the same? Apple just rolled over. Typical Friday action for Apple doesn't. It shows potential and then it rolls over.
It does, and I think the overall backdrop for the economy is strong. We had that soft landing scenario. We have a Fed that potentially could stay put now or do fewer hikes than we thought. But just to elaborate on what Steve just mentioned, boring is working. But the reason why boring is working is because energy and utilities equal AI powered infrastructure. So I'm going to say that the reason boring is working is actually because of the topic.
Yeah, I don't think of energy as boring, Sylvia.
I know you're the energy guy.
Well, all these lines are working for a reason.
The defense.
Okay, S&P turning back up. S&P 500 turning back up. Trying to turn the corner here.
This is the moment. It's up, nicely the last month or two. It's not usually the place to go and kind of look. But do you have anything on that, Steve?
Healthcare is fluky because, at any given moment, it's too broad of a topic because do you want, what we talking about?
Insurers.
We're talking about insurers. We're talking about
SpaceX.
companies, drug development. So it's idiosyncratic. I think to some extent, and it's tough because technically they should be thought of as defensive, but not all of them are. Not the bio.
I wonder about the Workday deal and about the software space. Again, one that's hard to generalize.
Okay, number of stocks advancing 246, so it's about 50-50. Same thing with the Qs, slightly more declining than advancing on the Qs.
Yes, but not like they're still not knocking the
Netflix pulling back to the 10 EMA on the 60-minute, looking for Netflix to bounce.
Focused on the aftermath of
Netflix,
situational awareness.
AMD,
because he had been aggressively shorting these names.
AMD looks pretty good. It's above the 20 EMA on the 60-minute.
It's fundamental, not just technical.
And situational awareness for a lot of our viewers and listeners, you may know, you may not. It's a giant hedge fund in San Francisco, hugely leveraged. It got crushed last week. Citadel came in, kind of rescued. I think that probably affected the macro market. It's got an odd name for a hedge fund, situational awareness, but that's it. So let's get specific. You got like IonQ, D-Wave, Palantir, and something called Unusual Machines.
Yes.
UMAC?
Yes, UMAC and Shield AI, which is actually a private company, but you can find these. We have a Jedi ETF, right? So I think there's a big drones are a very hot topic right now, and drones are doing particularly well. The unusual machines because it's US based, right? So you have that benefit that they're not offshore. You don't have the China exposure and things like that. But you know, with geopolitics, everything we see in the Middle East, and you know, war transitioning to more of a modern theme with AI drones, you know, pilotless planes, pilotless drones, and things like this, leading technology there. We've seen a real jump in that.
Look, Steve, 164% year to date.
Oh, I'm not
I'm not
looking at
looking to these other sectors. You know, where am I going to get that kind of gain?
On the other hand, are you okay with getting like 30% in these growth stocks?
Actually, I have a serious question before we wrap. We were just speaking last hour with the city analyst who has identified the stocks as entering bubble territory, which he describes as 2 standard deviations above the historical norm. Says it entered in April, probably still has more upside to go. But when it and 7 of its main components, including NVIDIA, breach their 200 days to the downside, watch out. And his point is, whatever gains you get right now, you're going to be giving back. What do you think about that point of view?
It's always risky to say the bubble is here, but I think we're closer to bubble-licious than not. We're certainly, the valuations are very frothy. Again, we're seeing the momentum swings. We hate semiconductors this week. We love semiconductors.
Right.
The Mag 7 is out. I'm calling the Fab 4 are back in. You know, the
AMD looks like it wants to keep going. Supermicro doing well.
Is on the AI trade.
Supermicro doing well.
And to a certain extent, we were talking about this in the green room. You know, there was a segment with OpenAI. If OpenAI doesn't get this IPO deal done, what are the ramifications of this? So I think we're very dependent upon this. You know, this sort of the optimism is rampant, and
S&P still rising. Apple trying to go some. Apple turning back up now, shaking the tree, chopping people up.
Buy umbrellas when there's a drought, basically, and that's kind of my thought.
Anything you'd add to that, Sylvia?
You know, I think dollar cost averaging for the long term, and you're kind of less impacted by.
Okay. Good.
And buy on the different opportunities, just kind of keep a consistent portfolio, and tends to work out in the end.
Thank you both. Really, we all kumbaya. Thanks, Sosnick. Really appreciate it. Let's do the bond report, shall we? With the yield curve steepening, that means just the difference between short and long-term treasuries. It's at its widest in 3 months. Good sign or sign of a debt crisis? Let's turn to Rick Santelli. Hi, Rick.
Hi. Well, it all depends on which side of the Fed fence you're on, and of course, monitoring capital flows. Let's start out with how exactly steep is the curve. There's a 3-month chart of 2s and 10s. The difference now 53 basis points. It's really important to look at the driving force.
Apple pushing.
That spread, the 2s and the 10s is the driving force. Well, judge for yourself. This chart is since the July Fed meeting.
Oh, sorry about that. Rick, shoot.
Percentages, 10-year yields moving up. The driving force is the drop in 2-year. And it is being caused by rethinking exactly what the Fed and the market are thinking. And right now, they're certainly not thinking there's a hike at the next meeting. And it's even more. It's not that this is the only yield curve steepening. Look at 30s to 10s. We call it the knob in Chicago. The difference is 57 basis points. It's actually the steepest in a bit more than 3 months. And therein lies a lot of information. I can't tell you how many people have been asking me about 30-year bond. What's driving it? Why are the yields going higher? The steepening of the curve is a big issue because many players like to use the 30-year as their sell leg on a steepening spread. And the driving force there is they want to be long, looking for lower rates in the short end, and to make that trade capital responsible, they do it as a spread. They buy the short, they sell the long. It's moving everything wider, and it really gives us a glimpse into the psyche of traders. They know that there's an inflation issue. The market on the long end seems to be taking care of it. But on the Fed side, we could talk about what people think they should do, but the market's telling you what they're most likely not going to do. And at the moment, not going to be hiking rates. Kelly, back to you.
There you go.
Thank you, Ray.
There you go. The steeper yield curve pointing to the fact that the Fed will not be raising rates.
Retail sales falling for the first time in 9 months.
If they did, it would shock the markets. That would probably be an issue. Okay. S&P above the 20 EMA, or excuse me, AMD above the 20 EMA. Rising, looks good. S&P 500 looks like it wants to keep going too. SPY turning back up, bouncing off the 20 EMA. Good signal. Okay, AMD, like I said, looks really good here. AMD. Netflix pulled back to the 20 EMA or 10 EMA. Looking for a bounce. Qs. Looking for the Qs to continue. Bounce. Super Micro had a nice bounce today. Super Micro. Looking for it to get back up to the highs. Palantir. Okay, Palantir off a little bit today, or back down to the 20 EMA. If it moves below the 20 EMA, stop, and we'll reassess it. I don't have a position. I took it off yesterday because it got a little elevated. Took the opportunity to take some profits. Futures still driving a bit higher. Apple looking for more upside. Apple. Apple's back above the 20 EMA. Could get going here. 60-minute. Apple looking better. Apple. Can we get it to push? Apple.
So far, August may be remembered as the month that software came roaring back, or at least mostly. Look at these gains just over the past 10 trading sessions. Atlassian is up 60%, Palantir 43 nearly, Zscaler 22, and Palo Alto up 16. And the overall has done pretty well too.
Okay.
The IG ETF is up nearly 11% just since August 1st, and is now down less than 1% on the year. Big difference from the spring. So where are the opportunities? Tyler Radke is the man we're going to ask about that. He's co-head of U.S. Software Equity Research at Citi. Tyler, it's good to see you. And first of all, there are some have-nots too, aren't there? How would you broadly describe that?
Yeah, I mean, what a year, right? You talked about the IGB being up 1%. Went to sleep in January and woke up now. You'd say, okay, not much of a year, but the volatility has been insane. I think what the key takeaway coming out of this earnings season is that we're entering much more of a soft
AMD.
software. The first part of the year,
Trying to push a bit higher. AMD. Got some decent volume earlier today. Copart's still going here. Opening range breakout noted by Grover. relative volume is much higher than usual.
AI products. And so now you see some of these winners really taking off. You know, Microsoft, you talked about Palantir, there's some other names. So I think it's really about identifying who are those companies that are really the AI winners, maybe haven't been priced like that from the market. The MongoDB, there's some other names we also like, but I think that's the general framework for investors.
How do we look at the difference? I know Kelly's talked a lot about cyber security. Those stocks have done well. They're software-ish.
Copart.
They're kind of all in the IGV. But at the same time, they do very different things that other pure play software companies where maybe agentic AI can kill them. So Tyler, how do you look at breaking down the investment opportunity?
Copart pushing a bit higher.
AI neutral.
Looks good, Grover.
Yeah.
Apple, no follow through.
You have the cybersecurity companies that you talked about. All those are doing well for obvious reasons. We see some of these companies, right? These are the ones that are selling essentially databases, cloud computing. We all know AI is incredibly data intensive. And then the third category is application software. Now that last bucket, that's where it gets a little dicey in software, right? Because there's more software applications being written this year than the entire industry combined because of AI, right? And so I think generally the safer ones thus far have been in cybersecurity and infrastructure. Now there will be some application software winners out there, but I think that's where sort of some of the risk lies. We generally have a preference for the data infrastructure companies.
Yeah,
you think about here.
Who then benefits from, sorry to interrupt, who benefits from all the data then? Because if AI is creating all this data,
Exactly.
our brains,
Exactly.
as great as they are, can't sort through that, Tyler.
Yeah. We can't store the millions of lines of code data, that's for sure. So yeah, it's the companies that are providing the databases, right? It's the companies that are, essentially providing the hyperscale cloud computing services. So Microsoft, Oracle, Snowflake, MongoDB. We've seen Datadog work this year as well, right? So those companies, how does their business grow? More data, more queries, more volume. So those are some of the winners that we think. Obviously, some of those have done really well year to date. There's some others that have not really participated as much in this rally.
And finally, Tyler, if there is going to be a private equity role here, could you see more, given these valuations in some cases, like Workday, still down from its 5-year kind of all-time high? Are there other candidates you think private equity could be interested in?
Yeah, that was a pretty surprising headline yesterday. I mean, this, I think, would have been, or as it was announced, the largest private equity deal ever, right? So, it sort of changes the calculus on maybe what is possible. But look, I think there's a lot of concerns just around, software businesses, the terminal value. And by the way, private equity owns a lot of software already, and they've bought some software assets at much higher multiples. So how are they going to monetize and make returns on their existing book of business? Now, look, I think some of these valuations just got way too cheap at the bottom. So I think that will be interesting to watch. We'll see if there's a formal announcement. And then certainly that's a mega deal. So smaller deals in theory could be a lot easier.
You do wonder if it puts in somewhat of a floor, underneath the stocks.
Yeah, I think so. Clearly saw the sector rally a lot yesterday on the back of those headlines. It's giving a little bit of that back today. But, I think it definitely makes you certainly cautious about shorting things at, basically all-time low from a valuation perspective.
Right, exactly. Tyler, thanks so much. We'll let you go.
Thank you.
Tyler Radke.
All right, coming up, is the classic car market about to shift gears? Robert Frank, tough assignment of being in. What are we looking at? That car is spectacular, Robert. What is that? Bugatti EV 110. We're going to tell you what it's worth coming up. What?
so hard. And so hard.
Apple, they do this all the time. They show potential and they just drag a bunch of people in on a Friday. Maybe we get a little pop in today. We'll see.
Here, so these are all new positions being put on. $1.56 million credit received here is the max profit. Max loss $14.94 million here. Excuse me, but yeah, $1 million. So
the S&P and the Russell. The S&P had its 27th record close of this year, 2026, but with the sell-off here down 1/4%, doesn't look like it will have that, but it will have a winning week. We are seeing all but the Dow with a winning week. The S&P right now down 16, the Nasdaq's down 105. That's about 0.2%, 0.3%, respectively. The Dow is losing 57 points, down 0.1%. It's time now to take a look at the state of the consumer. We get more retail names next week. We got retail sales in today, and we've gotten bits and pieces from some of the retailers thus far. David Swartz, Senior Equity Analyst, Consumer Equity Research at Morningstar, is with us. So I'll start with today's retail sales number. Month over month, it looked disappointing. Year over year still shows growth. What did you think of those numbers?
Yeah, so it's definitely not a terrible report because, as you said, we are still above where we were last year. But it did appear that there was a slowdown in July from June. There may have been some specific reasons for that, including that Amazon moved its Prime Days this year into June, and a lot of other retailers followed. So a lot of others, to try to counteract Amazon, moved their own sales for the summer into June from July last year. Another benefit that might have been in June was the World Cup. That brought in a lot of tourists from other countries, many of whom shopped. It does appear that at the end of the World Cup, there was a boom, but then it sort of faded pretty quickly as those tourists left. And also there was a lot of domestic buying of sports equipment and apparel during the World Cup, it appears, too. And then we have other issues, too, like gas prices, which have continued to be high. There were new tariffs imposed in July. And so there were some negative things in July that may account for why the consumer spending appeared to drop off in June.
And the World Cup, by the way, was half in June and half in July. So should we take the next retail sales print also with a grain of salt?
You can never really say exactly why these things change from month to month. It's always important to remember that you have to put them in perspective, that there can be ups and downs in these numbers for a lot of different reasons, and it's very hard to know exactly which one is the driver. We should see perhaps, more about what the consumer spending looks like when we get to August numbers. That will give us some more information on the back to school season. It appears, based on some things that I've heard, that the back to school spending may have started earlier this year. That also could have affected some of the summer months. But we'll see if that causes then a slowdown in August and September versus past years. There was also some issues with retailers stocking up on inventory early, I think because of the tariffs that were coming in July. That could have forced them to have some sales perhaps during the summer to try to clear some of that inventory. And then it also could affect the rest of the year because it is difficult to forecast demand several months in advance for the back to school and holiday season. So we could see a situation in which retailers have too much inventory of some products that are forced to discount.
Look, and we heard from Tapestry, which week to date is down about 20%. We heard from with these on-cloud sneakers, that is down about 14% this week. But overall, the consumer spending in the U.S., you said, while it's strong and it's generally held up, you have some concerns that it's slowing overall, even concerns with the buy now, pay later. I do want to get to some of the names that you like, so if you could respond quickly.
Yeah, sure. So we have heard from some companies, including Under Armour and with Michael Kors and On, you mentioned too, that have said that in the last few weeks, it does appear that there was a downturn in consumer spending, and they have noticed lower traffic in the stores. And so that could be a negative trend that we'll see throughout the fall. But again, you can't really tell by just a few weeks because they can go up and down. Some of the retailers that we'll be reporting later this month that I think are undervalued include Kohl's. Kohl's has been struggling for some time, but its same-store sales have been improving, and at least they're getting back to close to zero. So, and I think Kohl's is actually quite undervalued. Another one is Gap. Gap last quarter announced some weakness at Old Navy, We'll have to see how that works out. But Gap reports later this month, and
AMD hanging out near the highs. AMD.
Another one I think is very undervalued is Lululemon. Lululemon is
Got to get above the
only at
50-day.
time
AMD.
It's really out of favor right now because Lululemon's growth has slowed in the U.S. But Lululemon generally is a very strong retailer and brand, and it has no debt. Has a very strong balance sheet and has a new CEO coming in next month.
JP Morgan expressed a lot of concern about Nike in particular, which down
JP Morgan. JP Morgan.
to date. That's one of the names that you actually also
Off the high. More Bank of America. Off the high. Citigroup. A little bit higher. Citigroup.
Could you give me a thought on a couple of those? But
yeah, sure. So Nike has been struggling for a long time. And as you mentioned, JP Morgan downgraded it. It seems like really a very late downgrade because everybody knows that Nike's been struggling. But I think it's very undervalued. And consumer view of and investors' view of Nike right now is, I think, at an all-time low. And I do think it has nowhere to go but up. And I think that this could be one to buy if you're willing to hold on for a long time while it works on its turnaround. Some of the others you mentioned, both for example, On stock got hit very hard this week, even though its earnings are strong, just because of a small slowdown in wholesale sales. I didn't even lower my numbers at all, but people reacted pretty negatively, which suggests that people just are really concerned about consumer spending right now. And anything that's even a minor negative data point is perhaps seen as a very big going down the road, and they're overreacting to it. We saw that with Tapestry too, which you mentioned. So I do think there's some opportunities right now in the retail space and very undervalued stocks.
yeah, I saw Roger Federer, in fact, lost $52 million on paper because he has a lot in particular. My final thought is, what do you think could be more of a headwind? Maybe both. Would it be a rate hike now by the Fed, or the higher gasoline prices that may be here as we've seen oil higher lately?
I definitely think that gas prices could be a bigger problem because it's not only that people will have to spend more money on gas for their cars, but it's also
SpaceX.
For example, in footwear,
SpaceX trying to push a bit higher now.
Petroleum products. So if gas prices stay high, then shoe prices will be higher. And also it means that transportation costs will be higher. It means air transportation, shipping across the oceans. It means that trucking will be more expensive. So prices will go higher if gas prices and other energy prices remain as high as they are right now. So I think that's actually a more imminent threat. It does depend on how long oil prices remain high, and they can change very rapidly, as you know. So they could drop at any time. But for now, I think that is a concern for consumer spending.
Yeah, and sentiment, as you noted, has been a little bit lower. We even got the University of Michigan sentiment that was lower, and the outlook for inflation was higher. So there are some concerns with the shoppers. David Schwartz, thanks. Nice to see you of Morningstar. Thank you. Coming up, we'll take a look at the sector performance today and check out an ETF with exposure to some top Chinese science and technology names. The watch list will return after a quick break.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Pedalides. We're live on the floor of the New York Stock Exchange, getting closer and closer to the closing bell. But there's a lot to watch here between now and the close. Let's check out some of the sectors and moves that are important. Kevin Hanks joins me right now with some overall takeaways. Good afternoon. Kevin Hanks live at the CBOE.
Hello, Nicole. About an hour and a half left in the trading day and the trading week. We've got 6 sectors in the S&P 500 higher. We've got 5 lower, but 3 of those that are lower are the big ones: information technology, consumer discretionary, and communication services, all lower on the day. The S&P down about 0.2%, but the equal weight is actually positive slightly on the day. But the 3 big sectors: information, communication services, and consumer.
KSTR over 1 year is
SpaceX trying to break this downtrend.
technology and the interest folks have in this group.
Looking for a hammer / hanging man candle. Love to see us take out. Love to see us take out this high.
For pre-profit Chinese technology companies in China, listing in mainland China. So before the star market, for pre-profit, you couldn't really list in China onshore or offshore. You had to come list in the U.S. This is a move in China to get companies that were pre-profit to list within China. Fast forward to today, we see it mostly concentrated in the semiconductor industry. This has been hugely beneficial to the fund so far this year. The fund is up 30%. That's why it is currently our Korean shares China technology and semiconductor index ETF being 80% in the semiconductor space.
SOXL turning up, semiconductor ETF turning up.
Just a few weeks ago of CXMT, that's Chongqing Memory Technology. And they're a really interesting name that we just added to the portfolio. CXMT is their key memory supply.
SOXL.
A lot of demand where there's a shortage right now in memory chips. A lot of them are being taken up by the hyperscalers. We're seeing this potentially being a big supplier to Apple.
SpaceX trying to continue.
Because they're just having trouble accessing chips.
SPX, SpaceX.
So it's a really interesting company just out of the portfolio. K-Star is a key way, one of the only ways for U.S. investors, global investors, to get direct access to the shares. We hold them directly, whereas some of our competitors in the space actually use a swap. So we think that's a key advantage that we have.
Yeah, it gives people access to some of these names that they wouldn't normally be able to get involved with over a couple of years. I mean, this was less than $9 a couple of years ago, and now it's at $25. So it really shows the growth you've had. CXMT, we covered that IPO here, and I saw it up about 500%. It certainly sounds like the prospects for the company are really interesting, but when it was so elevated with that IPO,
S&P 500. Trying to make a higher high.
that's good for stocks. Or were you nervous that stock had run up too much and you didn't necessarily want to put it in the fund so fast?
Yeah, it's a good question, Nicole. I mean, let's remember that the float on this stock, CXMT, was relatively low. I think it's less than shares outstanding or unrestricted and freely tradable.
We just got rejected. S&P still in a descending pattern.
$500 billion, and so but that's owing to in some ways to the restricted nature, to the low free float. So that is one caveat there. But
But at the end of the day, this is a company with a very strong projections, with a high degree of potential. Again, as I mentioned, it's possible that they'll be a supplier to Apple pending government approval of that relationship. They're currently in negotiations. So, there's a lot of uncertainty around this company, but there's certainly a great deal of potential. But just with the caveat of that low free float.
Speak briefly about Luma, the newest ETF from Crane Shares, photonic and optical ETF.
Yeah, absolutely, Nicole. So Luma is our newest ETF. We launched it just last month, and it's up 6% since its debut. And Luma captures, yes, as you said, the photonics and optical communications technology. So for those who don't know, that refers to things like optical. A lot of people know fiber optic cable. Maybe your home internet, right? It's coming from that fiber optic cable, that super high speed internet connection that you can get. So that's one component of this. And basically what we're seeing is this is going to be absolutely vital if the AI adoption is to continue in the way.
It is so slow today. Nice pop in the morning to take profits off into strength. Reduced a lot of exposure. Apple, NVIDIA. Also had a sell. I forget what it was. Had a limit order that got filled. What was that? Had a limit order that filled this morning. I don't remember what it was.
So fiber optic cable is one example, but optical communications basically means that you're sending data using light, using photons, as opposed to using electrons that we think of normally using copper wires. And using light to send data.
Was it Shake Shack? No, I still have Shake Shack.
A higher volume of data can be transferred at once, and it also moves much faster. And we just think that that's the future. We have a lot of client demand for a product like this, and so we're happy to launch it.
Energy, XLE. I hit the highs, but faded. People chasing, got stomped.
We'll highlight some charts to watch as the trading week wraps up.
Who do we have? Any earnings tonight? Probably not, right? Baidu and Home Depot report next week. What is Home Depot doing? Home Depot. Okay, back down to the 50-day, looking for a bounce in Home Depot. S&P. S&P looking for this to get back up to 60. S&P looking back and get this back up to 77.6. We're above 77.60, 77.90. Okay, looking bullish here into the close for now. Apple. No follow through in Apple. Apple does that a lot on Fridays. It tricks people into thinking that you could buy some cheap, just out of the money calls and always get jammed for whatever reason. S&P on the move. S&P.
Thank you so much for being with us. The S&P looks like it could post a third week of gains. It had its 27th record close yesterday. And I see about half of the sectors in the today. What levels on the index are important to watch? What stands out to you, Ken?
Well, we had a great breakout, obviously, Nicole, and I know that we bulls are all targeting that 8,000 level above the highs we've made this week, which is pretty close to 7,800, of course. And we want to get into that 8,000 level, but there's always a good chance for a recent, really appropriate pullback given the breakout we've seen. And so I've got a line in there that I'm watching. It's the 76.20 level. Now, if you're a trader believing that there's more upside before any retracement occurs, well, then you might watch that 10-period moving average that's drawn in that light blue color that's right below the price action of the last 2 weeks. Some traders would take a little off if we closed below that 10-day moving average in anticipation of a potential pullback to the former resistance at 76.20, now potential support. In fact, I'd probably give it a little more of a range, something like 75.70 up to 76.20, about 50 points of potential support. So I think that bears watching on any weakness in the short run, but that's the kind of thing that happens commonly, Nicole. We get a breakout, and then we come back to the breakout spot for a test, and it's that successful test that will often bring new traders into the trend thereafter.
Understood. Let's talk about Oscar Health, which is having a good day. In fact, hitting a 52-week high. It's up over 120% year to date. It came out with quarterly numbers that beat the street, raised the guidance, and sold off on the earnings, but then went back into the uptrend and then hit this 52-week high. So when you look at the technicals, tell us the story and what you're watching.
Couple of fun charts here on Oscar. I've got a daily and I've got a weekly. We'll start with the daily. The thing that's intriguing on the daily, of course, is we're breaking out of a bit of a bull flag. It's a little lengthy. Now above us, what we have is targets if we can validate new highs here. So the close today over 33 or at 33 is going to look really bullish on the daily chart. The first target zone, maybe 35 at the 123.6% extension level on a Fibonacci draw from the peak to the trough that we made 2 weeks ago at 25.50. Now, what's also nice on this is we're just turning the corner with that MACD crossover at the zero line. That is a bullish indication as well, kind of validating the breakout and the potentiality for continued move to the upside. But the one I'm really excited about is the weekly chart. So if we can skip to that one, it's going to be the one that I think offers a little bit more intrigue for the trader of a technical nature. So what I'm watching there, Nicole, here on the weekly, we broke out of a huge range. We had an $11 support and a $24 resistance that ran for about 4 years or so, and we busted that recently.
All right, looking for more upside, S&P.
That same thing we're talking about the daily here.
Netflix turning up.
$37 level above is the potential target of this range break, right? If we take $13 range, add it to former resistance at 24, now potential support, it gives us the possibility of achieving 37. The reason that that's so intriguing to me is that's the all-time high, going back to March of 2021 when the stock got going. So all-time highs at 37, everything lining up from a mathematical approach. If you're looking at it from the weekly chart, all of that intrigues me quite a bit. Of course, through 37, a lot of traders are going to be even more enthused.
All right, we appreciate your passion about the charts. And Chevron, last but not least, has been a winner this week, along with oil itself. We've had the continued tensions in the Middle East, and naval blockade continues there in Iran, outside Iran on the Strait of Hormuz. What is interesting to you about the Chevron stock?
Well, it's certainly today's action. Clearing this 198 level for Chevron was pretty significant. The stock had been in a level below 198 since early April, going back to April 8 approximately. So we're looking at a 4-month move, a new high for the first new pricing, or I should say 4-month highs at least. And yeah, we've kind of moved through there. And I know that there's a lot of narrative story and headline risk here. But if we were a short-term trader, just looking at the range we've broken from 185 to 198, we can add in that 13 points and we can target about 211. That's pretty close to the prior highs that were just near 215. That gives traders something for consideration. But if you're a trader who wants to be even more long-term and aggressive here, you might look at the depth of this range we've broken now. So we ran to 198 and busted through, but our low was way down there at 165, and that might imply as much as a 30 to 35 point upside opportunity from 198. Now, obviously, those are lofty targets, and that means some very different things maybe as it relates to oil here, perhaps, but nonetheless, a really good move here today through an area that was former resistance. I think traders are apt to watch that 20-period moving average in orange for potential short-term support, as it could be the trending moving average of note for Chevron going forward.
Yeah, really interesting to see that breakout, and now at the highest level since April. Thank you, Kevin Horner. Great to see you, Senior Manager, Trading Services. Wow. And thank you, friends, for being with me every single day, joining me here on the watch list. I'm Nicole Petalides. I see you at 9 a.m. for opening bell, 2 p.m. for the watch list. Glad you're with me every day. Download our Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Market on close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
NCC. WX.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I growing that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
All right, no follow through. S&P pulling back in now. All right, so just kind of a drag.
Happy Friday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden coming to you live from our Chicago headquarters.
Okay, so we've just been in a downtrend all day. Every time it looks like we're going to break out, we turn back over. Hard to say what we're going to do here. I will say, I was just talking to a couple of members. S&P, okay, you got to keep in mind that we just came out of a 12-week consolidation. 12-week consolidation. That gives us about a $400 measured move, which gives us 8,000 as a target. We're already trading 77.83. Who would have thought that?
Restrictions on sales in China, lowering contributions to the top line, alongside a lack of margin expansion. SanDisk shares, though, are surging following the company's investor day. Strong guidance of mid to high teens, revenue growth, and 80% gross margins signaled robust demand and pricing power, which led to several analyst upgrades today.
All right, Netflix just turned back down. Netflix, have to wait until next week. Netflix. Google's starting to turn up. New York Fangs look awful. To end the week, New York Fangs got an hour to go. New York Fang doesn't look bad. Just consolidating, choppy, chop, chop.
On the Nasdaq, we're down 1/3 of a percent, 29,983. On the Dow, we are down less than 1/10 of a percent, 53,792. 2K holding on to its gains and its positive status on the session. We're up 1/3 of a percent, 3,063.
You talk so fast.
The 10-year here, we're at 470. We've ticked higher. We've got that 7 handle back on there. The dollar still hovering below 100. Gold is at 44.2970. A troy ounce. Crude oil at 82.34. That is slightly higher. Bitcoin, though, staying in its range, 62,920. It is slightly lower than what we saw to open the session today. I do want to check in with Sam, though, and see what's sticking out to her in trading today. Sam?
Yes, well, obviously, as you mentioned, the Nasdaq taking a breather there. Marley, memory is hanging in there, but most semis are down today. The Max 7 hasn't been doing a whole lot, although we're still headed for a positive week for stocks here. We have had some solid earnings. We've got a mixed read on the economy. We're going to be discussing a lot of that. So the market just appears to be, for this sort of summer Friday, digesting all of that. But small caps, as you highlighted there, continue to outperform. The Russell 2000 hit another high today. It could be headed for another record close this afternoon, even as yields have been nudging slightly higher. Clearly, the tamed inflation trends are diffusing this threat of imminent hikes, which is helping. The small caps also do appear to be benefiting from this expanding market breadth we've been watching and that value into rotation. But for now, Marley, I'll send things back over to you and Kevin Haynes with some of today's top stories.
Thanks so much, Sam. As you mentioned, Kevin Haynes joining us from the SIBO today to take a look at some of these top stories. Kevin, would love to just start with your thoughts on the market action we've seen this week. We spent the beginning of the week talking about how we were looking for a catalyst. We got quite a bit of data. I'm not sure we got the catalyst, though.
Yeah, Marley, these markets are very complicated. And sometimes people can confuse themselves with complication. But if you want it as simple as I can put it, watch crude oil. The markets are moving at an inverse direction to crude oil. When crude oil was lower this morning, the markets were firm. Crude oil turned unchanged and moved to the upside, and the market softened. Right now, subject to change without notice, Marley, that's what the overall macro economy is doing. It's triggering, the stock market is triggering off of crude oil prices in an inverse relationship.
All right, so then let's talk about Applied Materials and the earnings that we got from them yesterday. I was breaking them down on the show with Sam and Alex yesterday afternoon. Good numbers. It was a beat and raise quarter, but we've seen it hold on to downward both in after hours trading, pre-market, and throughout the entire session today. So take us through the numbers here and where you think the concerns are, Kevin.
Can't argue with anything that Applied Materials put out. It was a great quarter. Adjusted earnings per share, $3.50 per share versus $3.40, above expectations. Revenue, $9.12 billion versus $8.99 billion. Those are beats, but they're not crazy, sexy beats. Gross margins hit 50.3%. Segment performance. Semiconductor Systems brought in $7.04 billion, up 30% year over year. Applied Global Services generated 1.78 billion. These are all great numbers, but Marley, the expectations were incredibly high. And sometimes, no matter what good numbers you put up, they don't beat incredibly high expectations. I think that's what you're seeing here, Marley.
Yeah, I mean, I think you said it well. I mean, they said they'd had a really impressive run up. I mean, even with the move to the downside today, we're still up more than 165% for this name, despite them saying they're seeing, another strong year of growth. They see demand, they have visibility. But we did see a name that was moving higher today, SanDisk, moving up about 7% following its investor day and a lot of bullish commentary after what the company had to say.
Marley, I've got a new business for you. There's people that put out very strict calendars for when earnings come out. I think we should start a business when investor days come out with a calendar, because the move off this investor day, which you see often, because you come out and you give an aspirational view of the future, and that's what their CEO, David Kickler, did. He put out an aspirational look at the future that basically said these numbers are going to grow to 2030. He sees this happening. And so that was more than enough to move that stock higher. Some of his comments were quite impressive. When I look at everything he said, the one quote that got our strong performance today is the direct result of disciplined execution against the strategy we outlined 18 months ago. So this is a very aspirational and positive look at SanDisk, and the stock got a big bumps up about right around 7% on that news. Good day for SanDisk.
Yeah, certainly a good day. I mean, it's hard to argue with hoping for non-GAAP gross margins of 80% and annual revenue growth in the mid to high teens between 2028 and 2030. So as you said, aspirational, but analysts seem to be cheering it. And most of the notes I saw think that they believe that in JP Morgan here's theirs, is in many respects uniquely positioned to capture the ongoing structural inflection in NAND demand driven by rapid growth in AI inference. So aspirational or not, some of the street agrees that this is these are numbers that could be attained by SanDisk. I think why we're seeing this nice pop to the upside here. Micron also positive on the day. They have a little bit of a double headline here. They've got an upgrade coming from New Street, but they also have their Micron Ventures, and they're launching their third fund here now, targeting startups. So take us through both of these news items here, Kevin, and why we're seeing this move higher.
Yeah, Micron launched their Micron Ventures Fund, a $250 million investment vehicle built to partner with companies shaping the future of AI. So this is their third and their largest fund to date. And this is just very similar.
Chop, chop, chop.
Bringing in outside capital to fund the expansion of AI. Someone's got to pay these bills and make these investments. And it's clear the hyperscalers are running out of free cash flow. So this is the next idea that they have to raise some funds to do all the advancements of AI. So Micron Ventures, $250 million built to partner with companies shaping the future of AI, investors across the full AI stack, Barley. So an interesting way. Also, the upgrade. New Street upgraded Micron to buy from neutral with a $1,250 price target. Even with the share rally, Micron remains attractively valued based on price to cost of goods sold. So analysts like it. It's Micron is an amazing story. When you look at this company's history and its incredibly low PE ratio that is traded in the past and what it's doing now, they have benefited from memory in ways that you couldn't even dream of years ago, Harley.
Yeah, I mean, certainly, even with this new price target, they're looking for a 30% upside from where we're currently trading for Micron. Right now, they're at 965. I mean, if you think about we're at 965.56 right now, and you look at the last 52 weeks, they're up almost 700%. Year to date, they're up 237%, with a perhaps 30% more upside priced into this new price target from New Street. But also moving higher on this session, Fox Corp. They're up about 5%. Double upgrades, two different firms here, but citing similar reasoning. So why the now more bullish outlook on Fox?
Yeah, two firms, JP Morgan and Wells Fargo upgraded. We'll go through JP Morgan first. JP Morgan upgraded Fox Corp to overweight from neutral with a price target of 82 up from 70. Wells Fargo made it overweight from equal weight with a price target of 80 up from 65. JP Morgan also upgraded Fox Corp. Wells believes Fox is a beat and raise story. And the Roku edition, I like this term, is a cash growth machine, is what they called it. So general positivity about Fox Corp, two different firms talking about the not only where they find themselves, but the acquisition of Roku being key for their future.
Yeah, that Roku acquisition, a big part of both of those notes here. Kevin, really appreciate you highlighting that move to the upside and those upgrades there for Fox Corp and all of his other top stories today. Hope you have a great weekend. That was Kevin Hanks. And I'll send it back to Sam in New York.
Thanks, Marley. Coming up, we'll discuss the state of the consumer after that July retail sales print came in lighter than expected. That's coming up next on Market on Close.
Hey, investors, you know the market moves. Schwab is here to help you win. So, what you find, planning. Whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab.
All right, Apple, nothing there. Stock, okay, Netflix is starting to pop up here. Netflix popping.
Torches past B, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's check in with the markets, of course, before the final bell for the weekend. We are taking a bit of a breather here off the back of these records that we've seen for the S&P 500 and the Russell 2000 continuing to climb here, as we mentioned, off the back of another all-time high today. But we do have some softness across technology today, particularly the semiconductor chips that's weighing. We've got a bit of a softer performance as well for our Max 7 cohort 2. So that's obviously where some of the weakness is coming from, dragging down the NASDAQ 100 today. We're down about 0.3 or so. The Dow Jones is just marginally lower. So pretty range-bound trade, you could say, for this Friday. We've had a lot to digest this week on the earnings front, on the macro front as well, painting a very mixed picture. But what's going to be key, obviously, is how that's all going to feed into what the Fed does next. And as Kevin mentioned, we have, of course, had oil on the rise today, and that might not be helping stocks because, of course, that has very much had that inverse relationship, so perhaps pressuring equities to some degree today. We've got crude oil at $82. We've got the 10-year yield hovering it around at 470 right now. So that's also picked up. We're seeing that across the curve, in fact, particularly on the long end, up about 5 bips right now. So the US dollar.
All right, Netflix looking for a push bit higher.
Bitcoin is trading lower for us today as well at 62,000 and change. It does look like things are going to get pushed out as far as the Clarity Act this year. It could be the midterm elections that acts as the next sort of major catalyst for the digital currency. So it's something to watch, of course, as we head into the weekend here. I mentioned we are looking at pretty range-bound trade right now. Let's bring Marley back into the conversation and turn our attention to the consumer after that July retail sales missed expectations. Joining us now is Heather Herzog, who's the retail analyst at Cash App and Afterpay. Heather, thank you so much for your time. Happy Friday. What did you make of the retail report?
You know, it's interesting. You see these numbers and immediately you think, oh no, this could be really worrisome because these numbers have, this first time they've been down in 9 months. But if you dig into them, they actually really indicate that the consumer isn't completely shut down. They're just being more intentional about what they are spending on. So let's see.
All right, S&P fading now.
We saw that Amazon Prime, Walmart Plus, and Target Circle all had their big shopping days. Right?
S&P just not, doesn't have it. No juice today, S&P.
Last year, that was in July. So that spending, especially online, where we saw the numbers fall, moved to June. In addition to the fact that we still have that K-shaped economy going on. So the top of the K, those spenders are not price sensitive, but the bottom of the K, they still are. But again, it's that intentionality of how they are spending and what they are spending on that we are seeing play out in these numbers.
And you make a good point here about some of these one-off things that are calendar related with the movement of some of those sale days, also the tax refund support expiring. So as you look at that and we strip those factors out, how much genuine weakness is left? How concerned should we actually be about the health of the consumer?
I don't think we should be that concerned at all. I mean, we saw gasoline prices fall. I mean, year over year, they were up 16%, but they fell in July. Well, we had a heat wave going on here. I don't know. I'm here in New York. It was insanely hot. No one wanted to really drive around. So people were hunkering down. We saw that play out in grocery, which ended up being flat, but also restaurants were up a little bit. So that sort of indicates that the consumer is still resilient and they're just spending differently.
We're certainly seeing that in the corporate read-throughs. I mean, we've got a big week of retail earnings next week. I'm just wondering exactly what you're expecting to hear from those companies, because there is an argument to suggest that Walmart is more important than retail sales.
Australian accent kills me.
Leads the way. Wally, I mean, who's playing tip of the spear? Would it be Ukraine? Would it be the US?
Just chopping people up. This is just so boring.
We got to say Ukraine right now. Why is that, Jeff?
Trying to keep an eye on stocks to see if anything pops at the end of the day. SOXL trying to turn up. SOXL.
Retail sales tumbling in July, their biggest drop in more than a year. This is some key names in the retail space. Get ready to report results next week. Here shares top picks from the sector. BMO senior, Guggenheim analyst Simeon Siegel. You were there. Yeah. 6 years. So you got used to saying that. Treating me well too. So good to hear. So what stocks should investors expect to treat them well in retail, especially?
Oh boy.
Ross is in there and you don't like it, if I recall.
So Ross, so it's interesting. Ross was the one that now we've flipped to. I think Ross is going to be really special.
Okay.
So Ross, we have, call it 2 weeks to find out if what they did in the last year was just a reflective of the market doing well and everyone doing well with tariffs, or whether they've now triggered a multi-year story. And I think we're going to see that. I think what's going to happen is forever, you and I have been talking about TJX as being the off-pricer to love.
Yeah.
It's like Ross is taking their playbook. It looks like Ross can be one that now I will always tell you, Ross is the one that's taking share, and how are they doing it? Going a little bit more upscale.
Adventure shopping happening at Ross, and treasure hunting. How are we going to be able to see in the numbers if that is back in bed?
So what's been really special, what you and I talked about last time, was this idea that everyone in retail saw this revenue acceleration, right? These aren't hyperscalers, but when my companies grow 8, 9, 10% on average, that's through the roof. Ross comped 17 in Q1. That's a big number. And so we're going to see a deceleration, but the question is, does that come down to a 10? Does it come down to a 5? Does it work its way down? Off prices are supposed to grow 3 to 5. If Ross can keep showing us that they're going to see a healthy, but still above average growth, then you and I are going to have to start asking, how are they doing it? Are they grabbing price? Are they grabbing new people? Are they doing both?
Okay, so if we're comparing Ross's results and say Walmart's, they're in totally different universes in a way, but there's this overall strain on the working class that's probably playing out to help Ross gain share if they've got the right playbook in this environment. How do we see it in Walmart? How much of it is grocery tilted and even then gaining share in that 100,000 plus household cohort?
It's funny to lump them together. It used to be a lot easier. Now they're like several zeros different on the market cap perspective. But I think that's what's going to be really fascinating is it's not just, I know the K-shaped economy is the big conversation, but it's not just luxury works, off-price doesn't, discount doesn't. You have to figure out who's taking share within them and who's doing well within them. And there's winners in every subsector. So that's what we go through. And so that's why I think what we are going to look for is you're going to see, okay, who's incrementally grabbing more? But if I can ask every company for one thing and know that I'm going to get it, right? Because a lot of times we'll ask and dance around it. I just want to understand in the last 12 months, did you drive revenues by selling more, bringing new people in, or did you just get that tariff lift? Because if you just got that tariff lift, which is a funny thing to say, that tariffs were positive, but they did raise prices. If that's all you got, it's going to get a lot harder starting next quarter. Like we're in August, we're going to start seeing that. Those that were able to bring new people in, new people yesterday, means more sales tomorrow.
If you're looking at retail, playing at home, investing, what's the company and the metric in earnings coming next week that are going to teach you the most about how it might play out for the whole sector?
So sometimes I've got a really exciting answer for you. I'm going to go boring as anything, revenue growth and gross margin, but you need them together. Why? Because I need to know that I'm going to still get revenues and I want to go forward because this quarter that we're reporting still has that tariff benefit I'm talking about. Average so far, we're halfway through earnings, give or take. They're still seeing 8% lift. I want to know what they're guiding to. I want to know what next quarter looks like because that's when it becomes new. But I need to know that it's healthy. I need to know that you're not promoting.
July retail sales, e-commerce was actually down in this report. Now I know you got to take a longer view. This is just one, but who should we look at that perhaps reflecting and affecting, or is that just the shift in Prime Day?
I mean, the easiest answer is look at Amazon, but Amazon's growing beautifully. So I think there's an element here. Remember, we have the retail sales is a confusing metric that the government loves to give us because it's sequential as a headline, but you and I want to look year over year. And so it's very important to look year over year. And overall, year over year, we got a mid-single digit number. It's a nice looking number. So I think right there, e-com definitely sees the amount of times I hear Gen Z loves stores. People love to go back to this idea that the mall's back. And that's powerful. And that's interesting because, again, you and I have kind of joked around this. There's nothing better than a store. Because in a store, your shopper is your employee. You get to stack those racks with clothing, and then the store comes and does all that magical stuff that Amazon has to pay their employees to fulfill. Right? They walk over to the rack, take the clothes, walk it to the cash register, walk it out the door. That's all that shipping and fulfillment that the shopper is doing. So if this is true, and so far it seems like it is, speaking to your point about e-com, there's nothing better for retail than when people come back to stores.
Yeah. I mean, you try it on, you know it fits, you walk out. That's a pretty good deal. Timmy, thank you.
Great to see you.
All right, coming up, you're reporting this hour on the big shakeup happening inside of OpenAI. Our Kate Broom is going to join the quick next.
Okay, SOXL turning up. Okay. AMD turning up, SOXL turning up, Tesla turning up. Watch Tesla.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
If I had to sum up
Did Jones Beach there, Prano?
what I would say is that we are a country that is incredibly ambitious. I'm Jason Liberty. I'm the chairman and chief executive officer of the Royal Caribbean Group. I think my journey is an incredible reflection of what we've seen from many, many generations here in this country. You work hard, opportunities present themselves. Yeah, I certainly did not imagine that I would be running this incredible organization. So in 1969, the Royal Caribbean Group was formed, focusing really out of leisure travel out of here in Miami. And then over time, we've now grown to 70 incredible ships. Those ships sail all around the world. We are a set of dreamers. So we really focus on dreaming on what
IWM.
could be on a vacation experience standpoint. And then we infuse innovation into that. One of the reasons why a lot of the innovation takes place in the U.S. is one, about 80% of our customers come from the U.S. Also, some of the best talent in the world is sitting here throughout this incredible country, and our ability to bring them here that is very advantageous to us. When I think of what America's ultimate superpower is, I do think it's grounded in ambition. We are a collection of different cultures that have come together in this country, but ultimately focused on making sure that our country gets better and better each and every day.
It's under credit spreads. Okay, Tesla, no luck yet. Apple, we're trying to get something to go here. Apple. No, nothing. Apple. Apple.
Welcome back. OpenAI's talent exodus really full on though. Many new details from investor meeting today. It really has that important game.
Hey, John. So OpenAI CFO Sarah Fryer and President Brent Brockman, from what I'm hearing, held a meeting with investors earlier today. I spoke to a source who was there to share some of the behind the scenes details. First, I'd like to get in is that OpenAI CFO told investors that business revenue, I should say, has topped ChatGPT, and the consumer side of the business, Fryer saying that they entered the year at about a 60-40% split, but enterprise now accelerated much faster than expected. And she said those lines have now crossed. Also added that the majority of revenue, as she put it, is now enterprise. The higher margin business, and it really is what investors want to hear. It's been a big growth area. It's also ahead of the company's own forecast, which was for parity by the end of this year. The meeting was with current shareholders. It was planned well in advance, according to a source, but it does come a day after one of OpenAI's biggest hires, Denise Dresser, stepped down as chief revenue officer. These executives, from what I'm hearing, were asked about that. Greg Brockman thanked Dresser, but did sort of pivot to talk about the new CRO, Dolly Rogic. He's a cybersecurity expert, former COO of Wiz. And from what I am hearing, Greg Brockman also brushed off some questions about open source and competition. He said it's a misconception that open source is just cheaper. He says there's room for both. Other highlights, John Fryer talked a lot about costs, said that the enterprise customers have moved from talking about token maxing to now focusing on what she described as cost per unit of intelligence. Fryer did talk about the newest models for OpenAI being more efficient, about 54% more efficient, she said, on agentic coding tasks, and then some recent price reductions of their suite of models. She was also, no surprise here, John. Everyone wants to know the IPO timing, especially those investors. They would not comment on it. They're on file with the SEC.
Yeah, Ken, I wonder what you're hearing and learning about how that revenue increase in enterprise might be correlated with some of those price reductions that OpenAI seem to take Anthropic. I mean, sure, their latest models are getting very solidly reviewed for how well they
SpaceX turning up a bit. SpaceX.
how much more affordable they are. And for businesses that are losing money overall, I wonder what that means for margins and
New York FANG is turning.
So a lot of talk about margins.
Okay, New York FANG is turning.
Revenue inflection, as executives are describing. It's thanks to the uptick in
Okay, starting to turn up. New York FANG.
executives, again, this is them bringing it to investors this way, but that they have said that enterprise is booming because of that. The cost discussion, they have done their sort of internal model routing, saying you can use the most expensive models for the most difficult tasks, but we also have cheaper options. It's not something I'm hearing in terms of driving revenue yet, although it could very well be the case for private companies. But the margin question and any sort of profitability on that revenue, of course, is one thing. For the top line, we don't know what the margins look like, and I think that's going to be the biggest question. When he says what does that look like? How deeply unprofitable are these companies? We know they're not making money, but how bad is it? What's the sight? What's the line of sight to getting there, being profitable?
And with all these special deals that Sam Altman has been making, it's going to be even hard, I imagine, in the S1 to understand all that. Ruben, thank you. Now let's bring in CNBC contributor, so talk about this. Well, I just want to start on the chief revenue officer issue. From what they seem to be saying at this investor meeting, enterprise revenue is trending really well, which would make it surprising that the chief revenue officer might be leaving after 8 months. But then again, Sam Altman has endured a bit of a mutiny in the past, in part supported by some of the executives at the company at the time. So maybe they're picky about who they keep around.
Yeah, the way that I would look at this, John, is Sarah Fryer remains in the CFO role, so that's an important person.
sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes?
Shack.
I want to know how they discovered that hidden gem. That's
Shake Shack.
exactly where Market Matters comes in. I'm Carly Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcast.
Hey, Bob. Hey. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Had a stroke? Yes. Now we're in this hard together. Daily, I started to realize what I pick up from my dad.
AMD looking good. SOXL turning higher.
Probably 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, with content curated to fit your unique goals, you can spend less time searching.
SOXL. Semiconductors on the move.
Welcome back to Market on Close.
Dip's getting bought. AMD is at the highs.
According to the report, the chipmaker is planning its largest ever investment-grade bond offering of up to $5 billion across 4 maturities. The offering comes amid a wave of funding in the AI arms race, including this week's news of NVIDIA partnering with major asset managers for chips financing. It's now time for Options Corner. Joining me here in studio, Rick Ducat, our lead market technician, to take a closer look at AMD today. So, Rick, as we look at AMD and its performance, we know it has been a strong performer, but how much stronger is it than the overall?
Yeah, a scramble for cash lately. I mean, don't forget Intel also offering its own, increasing its own stock offering as well. But we can see, as to your question, AMD up 181% versus the SMH 94%. So outperforming what is an extremely strong sector by a large.
Broadcom turning up.
And when we think about the group of the CPU and GPU makers here,
AMD having a good day, coming off the low. AMD's back to the 50-day. I would take some profits. If you got short-dated calls, I would just take your profits and cash them in. We'll take another look next week.
Names here, Broadcom and NVIDIA, meanwhile, are the laggards. Always funny to think of NVIDIA that way here. But out of the group, they are down the least on the year. So kind of an interesting sector indeed. We'll have to see how things play out continuing next week. As
SOXL continues. Semiconductors looking good. SMH, SOXL.
Across the semis I was talking about a little bit ago, we were talking about Broadcom and how it's moving lower today. Now we're seeing AMD higher. NVIDIA is pretty much unchanged. We're, of course, waiting for NVIDIA, which could give some sort of move and sympathy to AMD. But as you look at their technical setup, we are getting a nice pop just today of more than 5% on this potential bond offering. But what are you seeing in the technical setup?
So this whole area that we've seen since earnings in May is kind of a thorny situation for traders because we've had very large swings to the upside and downside, a lot of chops, and a lot of like this area, for example, right here, an extreme low point that did reach our previous intraday lows by a large degree, but then rapidly reversed. So a lot of whipsaw type activity that is typically very challenging to do any kind of short-term trading here. Nevertheless, you could make some argument for trends overall. Starting with our highs, 584.73, you could draw a shorter term trend line along this blue line here. That has not been tested since we had earnings. Meanwhile, our even shorter white trend line going downward here has been broken pretty resoundingly at this point here. So perhaps the next step to focus on could be, one, a upward sloping trend line going up from those recent lows that I mentioned near 420, or also to start thinking about horizontal price levels. We had our old highs, 584.73, a repeated stopping point for price that doesn't really stand out as well in terms of extreme highs and lows. But this is often where price found itself reaching a intraday high or low point here. We also had this area near 487 and here near 461. So some areas to consider. So when we also think about our moving averages, our trend is starting to improve by this metric here, our 5-day
SpaceX looking for more upside. SOXL charging higher. AMD looking good.
Representing 1 month. Those are very close together at this point. So 490 to 495 presents a notable confluence area. To the downside, our 63-day EMA in gold, 475 roughly, stands out as a supportive area representing 1/4 of activity. Just to call attention to it as well, our 251-day EMA representing 1 year, all the way down near 331. So quite a bit of catching up to do from the longer term perspective. RSI has been trending down pretty consistently for a while here, but today's activity is showing that we are breaking above not only our trend line, but also the 50 midline. So things are improving more from a bullish perspective by this regard. We can see our volume profile study finally shows we have a node here between about 500 to 525 and another much smaller area here between about 410 to 440. But what I wanted to call attention to is that things drop off very significantly beyond that. We have another node lining up here with our old highs before our gap near about a 340, 350 or so.
And I know that AMD regularly ranks among some of the most widely traded options in terms of U.S. stocks here. So how is it trading today with this news of a potential, its largest bond offering today?
Yes, elevated activity. The sizzle comes in at 2.84, so 2.84 times the 5-day moving average of options volume. Almost about 800,000 options on the day here. 61% of those were calls. Our most active month for open interest is January 15th, 2027, actually, not our next front month like we typically see here. Often lately we're seeing that that's the big month for open interest for a lot of these names. So kind of curious here. Typically it's just the next month that's coming up. So in terms of our biggest single trade that we saw here, minus 1100 March 19th, 2027, 400 strike puts for a $4.3 million credit received here. 39.71 is where that credit came in. Unclear if an opening or closing trade.
Rick, really appreciate you breaking down the options action we're seeing on AMD today. Moving higher, we are up about 5.25% at 508.51. Thanks again to Rick Ducat, our lead market technician. And I will send it over to Sam on the floor of the NYSE for a look at what we have coming up next for the show.
Thanks, Molly. I'm pleased to say we'll be joined by the team next from Brent to discuss its AI index and trends in business AI adoption. That's coming up next on Market on Phones.
Sometimes, you could have done better.
XME.
Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week, schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Intern.
This place is incredible. It's where I get all your office supplies.
Okay, SOXL still climbing. SOXL.
It's like
Okay, Apple.
everything investors need.
Apple just dead in the water. No follow through.
Trade, get full service wealth management, and anything in between. Sick. We have to buy that.
Netflix bouncing off the low. Netflix.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange. Joining me now to discuss trends in AI adoption is Ara Karazia, who's the lead economist over at RAM. Ara, thank you so much for your time and happy Friday. Thanks for coming down to the New York Stock Exchange as well. Absolutely. Just walk us through exactly what RAM does.
So RAMP is an AI finance platform, but you can really think about our data set and the research we do through our products. It's a corporate card and bill pay invoicing products. So the data set that I work with as an economist is that universe of business spend. Particularly on AI trends, where this is a very closed off market, companies developing the technology are privately held. There's very little to go off as far as how this industry is developing. You can use surveys, but those are a little bit in conflict with the actual developments in the market. So we use actual business spend data to understand what are firms buying and how.
It's so fascinating because all we've got to go off is the corporate earnings, which obviously we've been getting a lot of this week. I mean, to gauge the scale of this AI trade and the spend behind it, what is your data showing right now?
Well, it's been a transformative market with a lot of shifts both over the last year, all the way starting in 2023. We saw at the end of 2025, beginning of this year as well, a massive run up in the share of businesses that are using AI at all. Now, more than 50% of businesses in the US are using AI. The question is now shifting toward the intensity of that adoption and then how far this market can grow going forward. And that's where you see a lot of differences between the kinds of businesses that are investigated. The top 1% of firms are spending $7.5 thousand per employee per month on AI.
Apple.
But the median is only about $12 per month. So big differences between the kinds of
Apple, a little pop.
kind of investment and the vast majority of firms that are just getting started.
So where are you seeing the most aggressive spend right now across company or industry?
AI spend follows this power law and track where the vast majority of spend is happening amongst a very small set of firms. Now, I will say there is still a lot of room for growth, clearly, especially amongst the median firm. But there are some suggestions that there are cracks forming in the AI thesis and the AI trade. And businesses are hitting a limit as far as how much they're willing to spend on AI.
Yeah.
The two major factors there.
9 minutes to go. 9 minutes.
The most powerful AI model to be released to date. So powerful that the government briefly banned it.
Yeah.
Has underperformed our expectations of the market. Only about 11% of Anthropic's business spend going to Anthropic is now on table 5. So businesses aren't really willing to spend on table 5, the most performant model, but also the most
Pretty dead day. S&P, pretty narrow range. Narrow range day.
I was about to go there. I mean, what are you seeing as far as appetite for adoption of Chinese models, given that obviously this is something that I'm sure the folks at DC are watching very closely?
Apple starting to push higher. Apple.
6% of them are using either open source models or Chinese models with direct payments to Chinese model companies.
Right.
Now, it's relatively small. It is growing. 6% isn't really enough to freak out about. I will say within the group of businesses that are spending on these models, they continue to spend and increase their spend on American model companies, OpenAI and Anthropic.
But the point is, it's cheaper and it's open source. That's what makes the Chinese so attractive right now. I'm wondering then, you mentioned the companies maxing out their spend. What was the high-profile one back in April? Was it Uber who sort of said they had spent the entire AI budget? I mean, how widespread is this across industry right now?
Well, it's common, but part of the issue is of analyzing this in the market is that if you were to look at a token maxing period in our data set, you wouldn't really be able to find it on a chart. Because even amongst the top 1% of firms, on the margin, we're finding that they are becoming more cost conscious, but they continue to increase their spend month over month as well.
Right.
Part of that is because the top 1% of firms spending on AI are also a very fast growing segment of firms.
Right.
And so their AI spend, although it is growing, is not crowding out other investments for the firm. They're generating so much revenue that they have money to spend. And for the median firm, they may not be growing as much, but AI spend is a very small share of their spend anyway.
Yeah.
So there remains room for growth. That's some reprieve for investors in this market. But on the margin, there's some shakiness and some cracks.
Understood. There's so much I want to get to, but I'm really conscious of time. So I do want to get to this AI jobs report that you did. It's so fascinating and such really interesting data that you pulled out here. I mean, as far as firms that adopt AI grow headcount 10% over the 2 years following adoption. I mean, what are you seeing right now as far as the job efficiencies, productivity versus displacement right now?
This was the first paper to use actual business spend data to identify what's happening in firms that use AI versus firms that don't, and then comparing like for like groups to see what are businesses starting to hire now in this age of AI investment. So a couple of changes, a couple of trends that we found. Overall hiring tends to grow. There's outsized hiring growth in entry-level hires. And that was the result that surprised us, especially because over the past 2-3 years, the narrative has been that entry-level hires were going to be selected for negatively in the hiring market in AI model theoretically to do their job. That hasn't been true. In fact, when we've talked to businesses that are intense spenders on AI, what they tell us is that they're looking specifically for candidates who know how to use the AI models and know how to use them well. And what better place to look than recent college grads and entry-level hires? So that's driving some of the growth. But as far as how the market's going to develop going forward, that remains something that we're tracking, and we'll be updating that research over time.
It's so fascinating, and I do implore everybody to go out and read this because the stats are fascinating. I mean, entry-level headcount is an interesting trend as well. I guess people are technology natives, but I guess they're also cheaper as well. So there's the attraction. You know, so much of the source of the debate in this market right now is to how people invest around this stuff is the check writers versus the check takers. Who's benefiting?
5 minutes. You got 4 minutes, 55 seconds to go.
One that's receiving the money.
You could say both, because for the businesses that are spending on AI, I'm of the school of thought that the level of spend that they're engaging in and the rapid growth of that spend isn't happening for no reason. Sure. Especially because you see that businesses are being conscious of the investments they're making to make sure that they're actually productivity enhancing. Now, the firms that are growing the fastest and growing their AI spend the fastest are also spending on more models over time. They're spending on AI outside of the.
All right, so technically we'll be making a higher high for the week. We're up 0.3% for the week, S&P 500.
That are simultaneously experimental, but interested in driving productivity from this kind of investment. It's not bubble-like behavior that is rewarding spend at no question.
Yeah. Really interesting work. I really appreciate you dropping by, Ara. Thank you so much for your time. Have a great weekend. Ara Braziende, the lead economist over at RAM. Molly, I'll send things over to you. Sam, we are nearing the end of our market session. Alex Coffey will be joining us to break down the busy trading week that was. That's all next on Market Up Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we.
All right, Netflix. All right, back above the 10 EMA on the weekly, Netflix.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing. Trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for the stock. That could certainly be a short to near-term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers brings traders the biggest headlines to start the day, from volatile overnight swings to
All right, get a little over 2 minutes, a little less than 2 minutes to go. 2 minutes.
only on Schwab Network.
S&P just dead in the water. No momentum, no follow through.
stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Yeah, back here on Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. There's just a few minutes left in today's session, so let's drive this home for the week with Alex Coffey, co-host of Next Gen Investing. Alex, obviously we took a bit of a breather today, particularly the NASDAQ, but we've had a pretty good week here. Just run us through your thoughts.
Yeah, I was listening to Marley going into the break and saying, looking back at the busy week that was, but the reality was
50 seconds.
as quiet of a week as we've had that I can remember. And quiet when we're used to some, action and volatility in the markets can make it a bit of a drag, guys. But the one thing that I
All right, folks, that's it. Closing bell. I had it on mute, unfortunately. Have a great evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, August the 14th, 4 p.m. Closing bell. Have a hard stop. Take care. We'll see you on Sunday for the weekend video, usually out around 2 p.m. Have a good one.